Frank. We're back in the old spaceship.
Where do you even keep this thing when we're not using it?
Oh, don't worry about that. Just look out the window. Check it out.
It was nice of that UFO to give us the stock box.
I wish they weren't so scary when they gave it to us, but yeah, it's pretty cool.
And it's on a massive discount.
Along with everything else we sell, it's Black Friday. Looks like we just got a transmission from Julie at HQ. Huge sales store-wide happening all month long.
Okay, great. Can you put that away now? It's distracting me from my driving.
One of these days, we need to install autopilot because I seriously think we're lost.
Didn't we get lost last year?
We did, I thought we would remember how to get there this time.
Let's just keep traveling to different galaxies till we recognize it.
Attention A1 Trading Show fans, if you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. We're here. We've made it to space theme. It's our favorite month of the year in terms of themes on the show. I don't know why, but we just have so much fun with these ones. Hope you guys are doing well. Welcome back to another space-themed live stream. Does anybody remember from last year when we did this? We're bringing it back. We have a full re-stream or a re-themed live stream here to kind of kick off one of our biggest months of the year, which, of course, is the Black Friday sale. If you haven't already seen or heard about our Black Friday sale that we're doing currently, everything is discounted for this month. I've been hinting at it in the videos and streams. You might have caught on to it, but we've got Black Friday deals all over the place. Whether you want to get access to the brand new stock box that launched yesterday or to this morning, midnight, whether you want pulver alerts, trade access, or get access to the EdgeFinder or access to our signals, everything is currently on mega discount. If you guys would like to get access to anything that we have in our store, we're going to be doing everything from the EdgeFinder, like I said, to memberships, to everything else. Everything is on discount, 40+% off. And if you're watching with us on live stream and you send us a direct message while we're streaming, we can get you up to 45% off on anything you want. Click the link being dropped in the chat if that is something you're interested in. I know a lot of you guys have been waiting for an opportunity to get access to the Black Friday discounts. They are now here. We're blasting off with our best discounts of the year, so don't miss it. Wow, that all rhymed. That was kind of unintentionally cool. Anyways, shout out to the editors. The stream looks awesome. The theming here looks so cool. Again, it is my personal favorite theme of the year. We also have a lot of fun with Halloween and Christmas. But anyways, let's go ahead and jump into whether these markets are going up or down on NFP. I mean, it is a huge day to kick things off with November, because we're talking about arguably one of the most important economic data points right now. Now, CPI for the last few years has been a big one, but I'm telling you what, in recent months, we are talking about huge importance being refocused on the jobs data. Jobs data are always important, but it's especially important when people are trying to gauge whether the economy is in a stable spot or not. Jobs are your indicator for sure, right? We wanted inflation to come down. Inflation has had some pretty good progress, but the question is now coming down to the wire in 8 or so minutes. Is the jobs data in the US stable or not? We get 3 pieces of information here today, all of which are very, very important. We get average hourly earnings. Are people getting wage increases as a general theme in the USA? If so, at what pace, right? People are getting wage increases, but are they strong, high wage growth increases, which show very strong labor markets conditions, or are they weaker than that? So we'll see. At the same time, you have NFP itself, the number of jobs added. And guys, we are forecasting just 106,000 jobs to be added. Many are forecasting such low numbers because of the hurricane, which sometimes you get these sort of external forces coming into the picture, right? You get a hurricane happens, or some crisis happens, and it causes a lot of people to not, be able to work, especially when you're talking about the state of Florida, which is, by the way, one of the USA's, most fastest growing states in terms of a state economy. Florida is really key. So if they all kind of had to pack it up and come visit us in Georgia for a few months, then or a few days, not a few months, it could be, it could impact the data. It could skew it a little bit. That being said, I am going to guess that the NFP report here today is going to be especially volatile, because that's such a hard thing to predict. How many people were displaced from jobs, or how much was hiring stalled because of the hurricane? That seems just like a very difficult thing to accurately forecast. That being said, like I said, the point is forecasts. Previous, we had 254,000 jobs added. We're forecasting 106. That's going to cause some volatility because, again, either we're going to hit those numbers and people are going to try and say, oh my gosh, either the jobs market is cooling or it was the hurricane. It's going to hard to tell. Or if they beat them massively, that US dollar may see fresh highs. Take a look at the US dollar with me here as we count down the minutes here. We got about 6-7 minutes to go. Dollar index pulled back the last few days, but it has been on a tear to the upside here recently. Big push up, a little bit of a pullback here last few days. But I actually put out a tweet and a post in our Telegram channel, which, by the way, if you're not in the Telegram channel, it's free to join. We got 38,000 people in the Telegram channel. Frank, Julie, and I, we do our best to kind of keep you guys up to date. Frank and I are putting out analysis and different kind of pieces in there. If you're not in the Telegram, join it for free. We'll drop the link here in the chat. So with that, I was pointing out that in the Telegram, I mentioned with the dollar index, we're at a decision point here. We've broken back up above that 104 level. The question is today, are we able to hold this level and push on with this recent rally in the dollar? Or is this going to be the kind of fade the event moment where we start to see 104 crack back down and perhaps the dollar index? Maybe this was one big mega pullback in the dollar. We'll see. Jobs data is really important because, again, if you get strong jobs data, which I'm thinking there's a possibility, especially with an election around the corner, who knows, maybe some extra efforts to get more hires done are happening. Now, I say that not as a conspiracy theorist or a speculator or, Kamala Harris and Biden, they're pumping it up. I'm not saying that at all. If Trump was in, he would do that. If I was in, I would do that. If you were in, you'd probably do that. The current standing president is going to do what they can to keep people happy and voting for them ahead of the election. It has nothing to do with party. It is a human nature thing. So we'll see how that plays. Whether or not the jobs data comes in soft or strong, but I think, just if I were to best guess, I think the jobs data could surprise to the upside. That being said, if it doesn't, and I'm wrong, it is what it is. We react, we change our outlook. However, I'm not gambling on the news. A lot of people, and I've seen this for years, I've done this for years now, where on these days people will just gamble their account like heavily. They'll just throw all their money on one side of the trade and just say, it's ride or die, baby. And I would encourage you to just at least consider the ramifications if you do that. It may work once or twice, but eventually it will catch up to you. If you're just gambling and risking way too much, it is not a matter of if, it is a matter of when the market will take its revenge, if you will. Anyways, NASDAQ, S&P slightly higher than yesterday. We had a huge close yesterday. Quick look at some of the earnings, by the way. We had Amazon. Amazon after the bell hit it. They had a strong earnings report, up 7% in the pre-market. That's a positive. Maybe not so much of a positive is Apple. Apple was down. It was down yesterday 1.8%, then proceeded to continue to go down by another 1.9% here in the pre-market. So Apple's earnings were not spectacular, right? Their earnings missed, their revenue slightly beat. Anyways, when it comes to stocks, those were some big ones. There were also some fun names that have recently reported, like Robinhood, which got absolutely crushed. There was something else that was up massively. Oh, it was Roblox. Anybody watch Roblox stock? Apparently Roblox stock was up 20%. Look at that, 20% as of yesterday. So some craziness on that side. NASDAQ, again, huge sell-off yesterday. Dow Jones, Russell, everything was kind of down yesterday. We'll see how this jobs data impacts it. I want to clarify too that I don't know what the jobs data is going to be ahead of time. Nobody really does, unless you're, working in those ivory towers somewhere where you have some information that the rest of us doesn't have. But for us, right, the common people, we don't know, and we can't forecast exactly what the jobs data is going to be. There's entire floors of PhD computer science brilliant minds trying to forecast this stuff, and they still get it wrong sometimes. Pretty often, actually, right? Where are these forecasts that we get coming from? It's coming from a bunch of data engineers and people trying to make a good guess, and research firms and giant banks who have tons of smart people working for them, and they still get it wrong. So you can see it's difficult to predict this stuff. That being said, as traders, what can we do with it? Well, what if gold has a huge break to the downside and we get really, really strong jobs data? Maybe there starts to become a case for bearishness. We watch for that. What about if they're really soft jobs data points? Well, then gold's rally may be willing to continue to move. Like we might see gold's rally persist depending on what we get with the data. So we'll see how that plays out. We got some interesting stuff here to look at. We got Bitcoin still. Bitcoin had some highly volatile stuff, but let me switch over. I don't want to miss the news. Yesterday I missed the news, and people get upset with me when I miss the spike. So let me pull this up just to give ourselves ample time. We got 1 minute to go. We got S&P, NASDAQ, the Russell's here, the Dow Jones is here. You got gold, silver, dollar, and oil. There is pretty much all of your key major markets to watch here, with just about 40 seconds to go. So let's see what happens. Again, I'm going to react. I do want to encourage, we got 1,100 people here watching. Don't leave right after the spike. A lot of people just gamble on the spike and then they're like, peace out. I'm done. No more gambling for me. Don't let that be you. Let's talk about it. We've got breaking news coming in here in 20 seconds. All right, we'll see. But again, a lot of people will just leave right after the spike. As soon as the big volatility is gone, they say, spiky, no happen, no more. I leave. Don't be that person. All right. Jobs data should be dropping here. Dollar index is a bit lower here. That's going to suggest jobs data was sort of weak. Stocks not having a huge reaction here so far. Gold slightly higher. This kind of looks like a, oh my goodness. Guys, what are we looking at? What are we looking at? What? What? Is that even real? 12,000. Well, I clearly was wrong in thinking that we could surprise that number. 12,000 jobs added compared to forecasted 106. Oh my goodness. That is crazy. That is crazy. And they also revised the previous number lower. So we missed jobs by a pretty long shot. Now, why is this not causing a bigger reaction in the stock market? Well, I'm going to tell you why. It's probably so far because the market's going to say, oh, we're still getting rate cuts. That's crazy. 12,000 jobs. Let's take a look at the dollar. That's kind of a comical number. 12K jobs added in a ginormous economy, by the way, guys. What's the population of the US? Like 300 million people or something? 12,000 jobs added in the month of October. Whew, that is okay. So anyways, let's try and make a breakdown of this. Average hourly earnings did tick higher here, but they revised the previous number lower. So people got wages, got increased wages overall, just modest increases. Non-farm employment change, what the heck? 12,000 jobs added compared to a forecasted 106. I mean, they were forecasting for low, but they clearly, I thought, again, this is why you can't predict this stuff. Like I didn't know, and nobody knows, but 12,000 jobs added, forecasted was 106,000, which was already really low. 223,000 jobs. That's the revision from last month's really banger numbers, right? 254,000. So they revised last one's lower. Unemployment rate stayed the same. So that's, arguably okay. So that's why I think you're getting kind of a mixed reaction from stocks. You're not getting a huge bullish, move. This is a 5-minute chart. So mind yourself, like that's not a huge move, right? So nothing huge on the stock market side of things. Gold is rallying slightly here. This would make sense to me, right? Okay, jobs data being soft like that, maybe it was the hurricane, but what in the world? That is kind of interesting to see such low numbers being put up on that. So anyways, and then unemployment rate coming in at 4.1%. So unemployment rate not rising is arguably what I'm going to tell you right now. This is what the permabulls out there are going to point to as a positive thing. You say, well, look, unemployment rate didn't rise, right? You can always pick out, here's the tricky thing about the data. You can pick out what you want to see. You can say, oh, look, 12K, that is horrible jobs data. 4.1, you could, if you only picked out that, you say, well, yeah, but 4.1, we didn't tick higher in unemployment. So I would say that sort of a middle ground is this was a not great, but not horrendous. Even though, yes, that's pretty bad. 12K compared to 106, not good, right? But you had wage growth, you had unemployment rate stay flat. If this was different, if this was horrendous, you would see the dollar index doing a ginormous move lower, right? So on the daily chart, however, we go back to this daily chart, we talk about what we just discussed. The dollar index is lower. Yields are probably lower here today as well. Look at this. The 2-year yield down 1.77%. And the reason I say this is not a massive number is because when the jobs data really cooks or really misses, right? You're talking about 2% moves on these things, 2.5%, 3% moves on yields, right? So we're not really seeing huge moves. This is actually kind of a muted NFP compared to some of the ones that we've seen recently. Stocks are slightly higher, right? Not a huge reaction here. Dollar index is not, ginormously up or down, but still dollar index definitely lower off of this. Let's see. Nick, how do you see this NFP affecting next week's rate decision? So my opinion, and it is an opinion because this stuff is hard to predict clearly, because my opinion just a second ago was that, hey, we might actually beat jobs. And then we missed by 90,000. So, as always, I'm just a guy on YouTube. You should do your own due diligence. Just consider me an idiot and you'll be better off, right? If you set your expectations lower, you're going to be better off. I'm not, a genius, and nobody knows for certain what's going to happen in the markets, right? So how does this impact the Fed's decision? You don't have to ask me. The market is telling you right here in the 10-year yield. We discussed this yesterday. When you have this going on, that's the market, the bond market saying, we're calling the Fed's bluff. We don't think they're going to cut nearly as much as they have sort of signaled, right? However, with this move, if you see this turn into a multi-day thing, then perhaps expectations for rate cuts kind of start to come back in. Where do I think the Fed will go this year? And I'm not saying I necessarily think it's the right thing to do, but I think they're probably going to cut once, maybe twice for the rest of this year. I think they'll cut the next one. It's right before the election. People will get all up in arms about that for sure. But I think that they'll probably cut. You can make your own decision on whether or not you think that's a ploy or not. But I think that they're going to probably, once the Fed starts cutting rates, if they cut gradually, stock market will probably soar, right? If they pause, in my opinion, that's actually kind of what I prefer them to do. I would like to see the economy, which we didn't get great signals of today, by the way. I'd like to see the economy do okay, right? And for them to not really need to cut rates, but just kind of do it slowly, right? But right now, today's jobs data are probably going to be the nail in the coffin for a cut in the upcoming meeting. So let's go take a look at the Fed Watch tool to get an idea of this, because this is kind of important. So right now you can see that for November 7th, which is the meeting next week, there is a 94.5% chance that we get a 25 basis point cut. Now, these numbers change a lot. So maybe they will, maybe they won't. But this today was the last one, right? This was the last major data point dropping, unless there's CPI next week that I'm missing. Is there CPI next week? Like before the Fed? There might actually be. I could be completely wrong about this. Tuesday, FOMC. No. So really, there's nothing. There's the services PMI, and then there's the presidential election, Congress, etc. Then the day after, 2 days after, we get the statement, the decision, right? Likely they're going to cut one more time here, and we'll see how the market reacts to that. But this data point here today probably increases that probability of that happening, and that is why yields are slightly lower this morning. That's why the dollar index is also down here, and this is why it's a mixed signal for the stock market. Stock market, in one hand, is saying, oh, okay, we got weaker jobs data. That's a little concerning, especially with some bad earnings we've had. And on the other hand, they're saying, but rate cuts, right? That's the, it's interesting to see. What's up, Dan? Good to see you in the chat. The September stated 25 in November plus 25 in December. Nothing has changed. Yeah, I mean, I think that we're still sort of on that path. The only thing that I think would really change that story and arguably be the thing that takes the dollar back to levels like 106 would be inflation bottoming out and jobs data just being super rock solid. Those are the things that would kind of maybe take us back into super strong dollar territory. But today, dollar is selling off on this, off of this number. I mean, it is a kind of a comical number when we think about it. A 12,000 jobs added compared to a forecast of 106. Last time around, they added 223,000. Very interesting to see that. But yeah, kind of a mixed reaction for stocks, which is confusing, but sort of makes sense. Parts of the market are going to love the increased probabilities for rate cuts. And at the same time, it starts to question where the economy is at, or how much of this was just the hurricane, or how much it was not. So there's just a lot of uncertainty on that. 12K jobs is comical. Yes, it is. Okay, so Nick, are rate cuts bad for the dollar? Yes, they are, right? Rate cuts, just generally speaking, are going to be bearish for the currency. By the way, guys, I mentioned this a second ago, but let me remind you, if you have not already, you just joined into the call, we are currently doing our Black Friday sale. We just dropped it here today. Currently, you can get 45% off the EdgeFinder. We got a bunch of people here watching. If you're interested in getting access to the EdgeFinder, if you've watched my streams or you've watched my videos and you are a EdgeFinder admirer from a distance, you've watched in the videos, and you want to be able to pull this stuff up for yourself. You want to be able to look at indices and different markets and gold and silver and see all the different economic data and how it might be impacting things. Or pull up the top setups page and see all of the different generated ideas from the EdgeFinder based on the economic data, the technical data, the sentiment data, like the commitment of traders data. If you want to be able to look at the sentiment data, like the commitment of traders data in detail, all of that is available within one tool. Our team here at A1 Trading has been working on this for about 2.5 years now, and it has come a very, very long way. It is currently 45% off. It is our sale of the year. If you've been on the sidelines waiting for a Black Friday sale, this is your chance. We've got the link dropped here in the chat. Send us a direct message right now if you'd like to lock in that 45% off discount while we are streaming. Stream viewers get an extra discount, that 45% off. We're doing 40% store-wide, but for stream viewers, you get 45% off the tool if that is of interest to you. If you already have the EdgeFinder and you've heard about our new stock box tool that just launched, that too is 45% off. We just launched that. That is a brand new tool. If you're a stocks, sectors, ETF, options trader, we just launched the new stock box. We've been talking about that, showing it in some videos and dropping some teaser info about that. You can also go to our website. Julie and the team here at A1 put a wonderful page together where you can actually go to our website, go to the Learn More feature, and you can browse all of the different very cool features that we've just built into the brand new stock box. So whether you're a stock trader or you're a index, commodities, currency trader, whatever you trade, we've got tools here, and our Black Friday sale just launched. So if you have not already gotten access to stuff for the discount of the year, I'm telling you, 1-to-1, I'm saying this candidly, if you've thought about getting access, this is your chance to do so for the lowest price possible. This is actually our biggest discount on a price-wise cut that we've ever done on the EdgeFinder, and it is only available for a limited period of time. Lock in yours right now, 45% off, by sending us a direct message. If we could drop a link one more time here, Chandler, if you don't mind, for those interested in chatting with a member of our support team, there you go. Don't miss it. We've been prepping for this and getting it all ready for you guys. So go crazy. You got access to anything you want. Pulver alerts, 40% off, 45 if you chat with us. Access to our signals room. You can see every trade I'm taking, 40% off, but 45% off if you're watching the live stream and you send us a chat. Or if you want the new stock box, if you already have EdgeFinder, get stock box. It just launched, 45% off. We've been working on that all year long, and we are thrilled to bring it to market. Can't wait to get some feedback from people who, as they start to use the tool. Let's take a look at some more charts. Stocks up about 0.5%. So slightly higher here off of the jobs data. Again, we recapped this a moment ago, but let me just mention again what AMZ and Amazon came out with their earnings yesterday after the bell, hitting expectations. This is important. Amazon is a really important indicator stock because it's very much the consumer spending, right? People do a lot of their shopping online. So seeing consumer spending contribute to strong earnings for Amazon is very important. At the same time, So is Apple, and theirs were not so exciting. They were not so impressive. They missed on their earnings, but their revenue was still just modestly higher than what was forecasted. Gold here this morning, still making slight gains off of this NFP report, which came in worse than expected on the number of jobs added. Unemployment rate, however, holds steady at 4.1%. Now, I'll tell you what, the market would be having a crazy reaction if right now at 4.1%, if we said, oh, we just ticked back up to 4.3, then you guys would probably see bear neck, right? You'd probably see, time to be super careful. But 4.1%, this makes it sort of like a confusing mixed signal. Wage growth still there, so we'll see. But I would say that the reaction to this being mixed kind of makes sense. I think now the market's just going to go back to doing what it has been doing if you're on the stock indices side of things, which is watching earnings reports. Would you buy or sell Amazon? Well, Amazon, I sold puts on Amazon recently. What did I do on Amazon? I think I sold puts down at, was it 175? I think it was 175. So those puts I sold are probably they're probably going to look pretty good today when the market opens up, because again, I sold those puts. So I shorted puts. So the put buyer is probably going to be a little sad on that one. However, I also sold puts on Apple as well, and that one's lower here. So when it comes to Amazon, I like the company, but the reason I sold puts, the idea is basically I'd only buy it if it were to have given us a larger pullback. In one hand, I'm glad that the puts are going to expire most likely worthless, which means I just, the puts cash in for the full possible premium. On the other hand, I would have liked to see the stock just really come down and give me an opportunity to start adding some shares to it. I don't own any Amazon. I've just sold puts on it a couple different times, and no cigar yet. I'd actually like to get assigned, meaning let's say I sold a put here. If the market trades down here and the put buyer exercises their option, I buy the shares at that price. Haven't been able to do that, and I've just been collecting premium, so I can't complain, but I also wouldn't mind getting assigned if it happens. Okay, what's next? Bitcoin is actually in the green here again today. Narrowly missed my stop loss on this one, so I bought Bitcoin. Market's made a nice move here, pulled back into support, found it there. Question is, can we hold it, right? If we can stay up here and start pushing back to those highs, if we close through the highs, that'd be a really positive signal, and I could start trailing my stop loss further. But for now, just going to leave it there and see what Bitcoin wants to do here. Bitcoin trading at one point down about 2.5% today, but now up about 0.26% at the time of streaming this. Nasdaq's up about 0.4, S&P's up about 0.5, Dow's up about 0.5 as well, and the Russell's up 1%, which makes sense as the Russell is very sensitive to interest rates. Interest rates, by the way, yields are falling here this morning. Two-year yields down 2.18%, 10-year yields down 1.12. So you're seeing some yields coming down a little bit, which in some ways is helping certain areas of the stock market more than others, right? Real estate, going to like that number. At the same time, you've got IWM. This is the Russell 2000, going to like that. So some of the higher leveraged areas of the stock market are going to like that drop in yields off the cool jobs data. That's where it's a little confusing. Bad jobs data is unevenly distributed in terms of its response to different markets. Some places are going to like the soft jobs data. Other areas are not going to be too thrilled with it. For example, the dollar is not going to love that. Dollar yen here, dropping here a little bit last 2 or 3 days, tried to get some gains going and then dropped here again off of this jobs data. So there's certainly markets that are loving the data and others that are really not liking it. So anyways, guys, we got our next guest joining here in just a second. I'm going to be joined by Kenzo. We're going to real quick run a quick break to thank one of our sponsors here on the show, and then we'll be right back with Kenzo. Before I cut to break, let me just remind you guys, the Black Friday sale is currently live. We'll drop the link here in the chat. Get 45% off store-wide, whether you want the EdgeFinder, access to the trading signals, the new stock box, whatever you want. It is currently 45% off. It is our biggest discount of the year. So don't miss it. We'll be right back with Kenzo.
This was our best year yet at A1 Trading. In 2024, we brought the incredible Chris Pulver in and gave you guys access to all of his trades and analysis through Pulver Alerts. We also introduced our newest market scanner, the Stock Box, whose AI algorithm is scanning each and every day to provide you with bullish or bearish biases on the top stocks and stock sectors from around the world. Not only that, but the Stock Box gives you a behind-the-scene look at what the largest hedge funds in the world are buying and selling through the 13F scanner, so you can keep up with what people like Warren Buffett or Steve Cohen are adding to their portfolio. The best part of all, both of these products are on sale now for a massive 40% off during our Black Friday sale event. The Stock Box, the EdgeFinder, Pulver Alerts, and the VIP Discord community, as well as our Trading View indicators, are all on sale for 40% off. This is the absolute best discount of the year, hands down. So if you want to take your trading to the next level, don't miss out on the 40% off Black Friday sale event. You can find out more with the link being dropped in the chat now. Again, 40% won't last forever, so take advantage of this huge sale. Stockbox, EdgeFinder, Pulver Alerts, VIP Discord community, and Trading View indicators, 40% off right now.
All right, and we're back with Kenzo. Hey, Kenzo, how's it going, man?
I'm doing great, thanks, and you, man?
I'm doing great. It's good to have you back on the show, all the way from South Africa, guys. We have people who come on the show from all over the world. It's always good to have you on, Kenzo, because we can really break down some fundamental analysis. Speaking of which, we have no shortage of that today. 12,000 jobs added compared to the forecast at 106,000. Quite a miss, right?
Yeah, that's crazy. Unless if maybe they will revise the number, maybe we will see that next month. Yeah, but that is way too low. I think it's great because next week, I think it's next week or next week, we have Federal Reserve rates. So maybe that will clear the road for them to cut. Because if the number went a little bit higher, that was going to be something else. And another thing, I think it's good because our stocks, like they were not performing very well, even though they did actually release some good numbers, but this at least clears the way for them to push up again. We saw Apple, Amazon, Microsoft, they all did actually do their earnings, but they were not really that nice. They were good, but it's like people, they were not really interested in that. But this, I think, is going to help them to move a little bit. I think USD, NASDAQ, they will try to push.
Yeah, and after the big slide yesterday, S&P 500, we'll see if it can hold support here around this 5,700 level. Same thing with the NASDAQ, hit some support here yesterday. Dow Jones had a big flush here the last few weeks. We'll see how markets react here again to this. As you mentioned, the one kind of major positive on weaker jobs data, as weird as it may sound, is the, of course, increased probabilities that the Fed is going to cut rates. The consensus is that they're going to cut for the rest of the year. However, the question is this too much softening or not? I think we're working here, Kenzo, with a canvas that is pretty set up for good economic data, right? You've got a lot of things here that people are kind of feeling confident about. Jobs data may not look good this time, but over the last few months, we've had consistently pretty decent jobs data. At the same time, PMI numbers have been pretty solid overall, especially for the services side of things. GDP growth did miss. So there's some signs of cracking here in the economy. But maybe the theory here is that, well, you're getting a little bit of crackage here, but as long as the rate cuts continue to show up, that could be sort of leverage and liquidity back into the market to keep things kind of running steady. I mean, we have elections right around the corner too, Kenzo. Is that playing any part in your analysis here in terms of gold, stocks, the dollar, etc.?
Yes, but on election, it's it's tough because it's confusing. You don't really know what the investors want actually. So, and sometimes for this week, it's like actually, let's say for this month, until we get the election done, mostly most of the stuff that we follow, let's say your strategy, it might not react actually consistently exactly the way you know it, or maybe let's say some of the news events that we have up to now, or let's say from now going further, they might not really react positively or negatively, or let's say they won't move that much, or they won't react the way we were expecting. Let's say maybe now we get a positive outcome from the news. You might see the news not reacting to anything. Why? Because maybe investors are focusing on the news, I mean, on the elections, and sometimes you might fight the market not knowing or not understanding that everyone's just focusing on the elections. You see,
Yeah.
so
I think
something that can move aggressively, I think, is going to be gold, and maybe, yeah, gold. Stocks will move, but most likely they will be complicated.
Yeah, I was going to say that it's a good point about just in general during this weird next week or so, last few weeks really. It's been a strange thing because yes,
Mm,
economic data is still important. Yes, company earnings are still important, but there's this weird extra flavor of who's the president going to be, what is that going to do to markets, and one thing that has been consistently the case, you can there's not been. Here's the thing, yields should have probably gone down more today in my opinion, but I think that there's this big upward driver which we've discussed in the past, which is both presidents are likely to spend a lot of money, which puts a floor potentially on inflation and on interest rates, how far they can come down. Because again, if both candidates, whether you agree or disagree with their policies and how they spend the money, regardless, they're both forecasted to spend a lot of money, and spending a lot of money is inflationary, right? Because the government doesn't have any money; they print it. So when they print it and
mm,
print it and print it, that is, in my opinion, one of the more practical reasons why yields are also up. They're up on some strong economic data, but it's not been a massive slide of just unbeatable US economic data. There's been some mixed reports in there. I think largely part of the reason here
mm.
is the election, is the bond market saying, well, hold on just a second. Both of these candidates are going to spend a lot of money, and it is likely to be inflationary.
No, you're right. You're right. So you're right on that, and that obviously it has to cool off after, let's say, maybe 2 weeks, 3 weeks later, because they
Mm.
no longer have these rallies. Because on the rallies they actually spend a lot, and on top of that, people who go there, or let's say voters, they also spend when they go on those rallies. So that actually increases inflation. So yeah, I think at the moment things might not react the way we want. It's that time where you can just buy or sell and hold and just relax. But if you just want to get in and get out very quick, it's also good because the market will be moving very quick. But at the end of the day, it's not really that safe because the reaction of the market sometimes might not really link to any, like we might see the market moving, but when you check if maybe there is any data relating to that movement, you might find that there's nothing.
Sure. Yeah, no, it is sort of a weird, strange time. And I saw somebody comment on one of my videos recently that they're gonna take a break until the elections pass. I think that is a certainly for some might be the right call. Maybe it's better just to stay out of the way and wait for some of that to pass. Because there are some erratic moves that are
Mm,
going on. You've got, one way to make sure you everybody keeps this on your watch list. The VIX is still at 22, guys. A 22 VIX um, is not incredibly low. So even though the market has been drifting higher, you've got a market going up, but a VIX staying high. This is telling you that the bond market is charging a pretty good premium here currently to buy protection, buy puts on the market, buy calls
mm,
on the market. It's charging a bit of a premium there. And when that is happening, what that's telling you, and a high VIX is happening, it's
exactly.
saying bond sellers want higher premium in order to sell you a put or a call, and that's telling you that the market thinks there's potential big movements coming. So when the VIX is low, the market thinks there's not big movements coming. When the VIX is high, the market thinks there's massive market movements coming. So definitely one to watch or add to your watch list if you don't have it already. The other thing, kind of the same tone, is as we just discussed, gold, which is up in a way this year, actually strongly outperforming the S&P 500 and the NASDAQ, despite them having great years. It's interesting. You don't really hear a lot about gold on the television. When you listen to stuff, it's always, stocks this, Nvidia that, but gold has had a really incredible year. Do you think, Kenzo, gold is likely to continue its upward trend into the new year, given the current situation, stuff that we know?
Yes, I think so. At the moment, if maybe we check, gold is still flying, and you're right, since around the start of the year higher, and yeah, we have the elections in the US that is going to also make gold to go higher. Plus geopolitics all over the world. There is Israel, Iran tension stuff there, and Russia and China still continuing. So even if maybe the election ends, maybe we might see it selling off a little bit. But at the end of the day, I still believe that we will see the sell off or the cool off once we no longer have those tensions in the Middle East and Russia and Ukraine. Also, China and Taiwan, I think there are some messed up stuff going on there. And if you are an investor in those countries, for you to be safe, it's better to have gold and maybe US bonds. That's why we're seeing DXY also going up, because there are people or investors who are also buying US bonds with around this time of tensions.
Yeah, that's an interesting point too. Of course, if you're going to buy US bonds, it's going to cost you US dollars, so perhaps some demand for dollars on that front as well. And yeah, I mean, that's the thing to throw in, of course, what we just discussed. The concept of the election coming and going could also be one less worrisome thing for investors, regardless of who wins. Once the kind of question of who wins is no longer there, it could act to sort of put some downward pressure on gold, just as some of that premium could come out of the price of gold, right? People are paying probably a little extra gold for gold currently to pay for that potential protection that it could offer in the event that you get some sort of question of a non-peaceful passive power that could cause people to get scared. It's similar to like when the debt ceiling happens in Congress, and they all start, there's just a bunch of uncertainty and questions, and how bad could this get before it gets better? And that's sort of a risk that I think gold is being paid a premium for currently because of. So anyways, gold's an interesting one to keep an eye on. Currently, it just seems like it's in a perpetual uptrend, and fighting this has been a very difficult task this year. Trying to fight the trend on gold has been a losing strategy pretty much all year. There's been very few major pullbacks. Are you still there, Kenzo? I think your camera might have died.
Yes. I think my network is a bit slow. I'm still here.
Okay, no worries. We could still chat with your avatar there. No problem. What is your thoughts? I have another one for you, Kenzo. What do you think about Bitcoin?
I think Bitcoin is trying to pull back. Maybe I think I don't know. Maybe Bitcoin likes lower rates. Maybe because at the moment it seems to be performing a little bit much better. It seems to be going to pull up one time. At the moment, I think it might pull, or let's say, sorry, it might go higher. But during this time of elections, I'm a bit confused with Bitcoin, because it doesn't really, I don't really know its roots. That if maybe there is elections, or if maybe there is politicians doing stuff like this, how will it react? It's not really the same as gold. So, but at the moment, it seems to be just doing fine. I don't think maybe I know much, especially during elections like this.
Yeah, no, it's kind of a tricky one. It's gone up a lot here recently. I do think that is sort of the ultimate risk asset, meaning just like stocks,
Mm,
they typically go up. Bitcoin seems to go up the most and the best when rates are low and inflation is cool, stock earnings are good, GDP is growing. Basically, it's like I always call it like the pampered child. Like if it's gotta have the perfect scenario to not pitch a fit, and that's pretty much Bitcoin. When everything's lined up correctly
mm,
for it, it can go crazy, right? It's just that when things get reversed, like we saw in 2022, where you had this really ugly period of time, people who were long Bitcoin saw
mm,
drawdowns of 75%, and in some cases worse. So it's one of those things you have to kind of play the environment that you're in. For me right now, I think that Bitcoin has upside as long as we continue to see all of those dynamics kind of hold. Expectations for rate cuts to
mm,
continue, inflation to not spike higher, and the economies of the world to be holding up decent. I think you could see Bitcoin higher. It's just a question of keeping an eye on those metrics all at the same time. It's kind of with the software, that's what we've programmed it to do. Keep an eye on the economic data, GDP, PMIs, etc.,
mm.
and watch for Bitcoin signals to either flip bullish, bearish, etc., based on what's going on.
Yes, yeah. You're on gold. I think so. Not on gold, on Bitcoin. I think you're right. It actually performs very well when the economy is quite healthy,
Mhm.
and when investors have extras to spend. Not actually only extras, because Bitcoin it's used by almost everyone. Even if you are not an investor, most people start investing from crypto, which is Bitcoin most of the time. So yeah, I think we might see a very nice push to the upside. The more we see the rate cuts, the more we'll see it go even higher.
Yep. Yep, we'll have to keep an eye on it. It's an interesting market, and depending on how things shape up over the next few months as we start to continue to watch the Fed potentially cut rates, keep an eye on the jobs data, et cetera. Today was not a great number, so we'll have
Mm,
to see how that plays out. But you can see again, just to recap for people who are just tuning in, we had very much disappointing numbers on the number of jobs added. Now, unemployment rate was 4.1%. It didn't tick much higher, so you could point to this and
mm,
say, oh, well, it's not all lost, right? You had unemployment rate stayed steady. That's fine. Um, this was not so good, right? This this was okay. So just a mixed report, and I think that's why you're not seeing a ginormous one directional move like we see sometimes on NFP. Sometimes on NFP days you get ginormous one way moves. Other times you get something more like this, which is a mixed bag kind of report where you got some things moving up a little bit, you got some other things moving down a little bit. But just not a ginormous, decisive one-way move like we get when
mm.
everything sort of lines up. Is that anything to add on that, Kenzo? I mean, on that concept?
Yes, mostly I like to call it like they cancel each other. So
Mm,
if the other one is positive or negative, or let's say the other one is weaker and the other number is positive, though, so most likely they just cancel each other. So,
yeah.
and mostly you won't get any move. If you check your market, the market will just continue as usual, which means it will be following maybe your trend or whatever that it was on your chart. So yeah, they just cancel each other. So it's like we're done with NFP. Let's focus on the market again, or let's say technical analysis. Then we can move on. We will wait for another economic news.
Yeah, I think that's a great way of putting it. Kind of default back to just current market trends, momentum, where it's headed or not, and uh, kind of just expect a back to business as usual if you get those mixed reports, which I would say today's NFP report was mixed to slightly bad is the way I'd score it. I'd give it a C plus, out of the traditional grading scale. It's not an F, it's not an A,
Mm.
it's probably a C plus, not a B even. So that's I think B is completely a middle ground, but probably closer to a C. That's my opinion on it. Kenzo, I want to thank you for coming on here. I know you got your camera's no longer here with us, but I know you could see us, so we'll wave at you. Thanks for coming on the show, Kenzo. Before we let you go, everybody who's watching, if you guys want to go subscribe to Kenzo, he's got great commentary, free value on his YouTube channel as well. He comes on once a week to help kind of talk through some fundamentals with us, and I really appreciate having him on. So if you guys could do me a big favor, make sure to go show him some love. Subscribe to Extra Hot Forex on YouTube. Kenzo, thanks so much for coming on. We'll see you next week.
Thank you very much, and your viewers, man. Thanks.
See you, man. All right, guys. Yeah, always good to have Kenzo on. Super smart guy, and great to get his commentary anytime he can make it to the show. When we take a look at top setups here, I'm going to remove neutral readings here for a second. We've got a couple things to look at. Pound dollar just showed up as a bearish reading here. I'm curious about that. Bitcoin still giving us that +7 reading, and you'll notice indices sort of dropped off here. I do still have some index positions that I took when we were getting more bullish signals. If you're wondering how I use the EdgeFinder, you know, if something drops off from a signal that is here and I'm still in a trade, do I just close it? The answer is no. I usually just let technicals guide me from there. I usually take a trade based on what's currently shown, right? And then I'll just manage the trade even if the signal disappears from the EdgeFinder. So indices trades for me, I am long, semiconductors still. I'm long the NASDAQ. So these things have the potential to, bounce and continue the technical moves that I think they could have. But if they don't, if we start to break through the lows again, I'm going to really just reevaluate things, especially with the EdgeFinder losing its convicted bullishness on the indices. So we'll see. I'm kind of sidelined on that side of things currently in terms of new trades. That being said, there are other things that I'm watching. I've got some currency ideas, got some dollar crosses here. Dollar yen, I still do like on the bullish side. If we can get a good sized pullback here, although dollar yen is still far away, if we can get a bigger pullback, I was kind of hoping we'd follow through here a little bit so I could maybe look for some opportunities on USD JPY. There's a couple ideas that I like on that front. Dollar Swiss is another one. If we were to get a pullback, I might be interested in some longs there. Dollar CAD, pound yen. Got a lot of currency trades that I'm currently watching, and pound USD is a softly bearish reading here on the EdgeFinder as well. So I'll look at this one, keep an eye on that. If I take that trade, it will be shared as a signal within our Discord channel. If you're not in there already, it's a great day to join. We currently have our Black Friday sale going on. It is currently 45% off to get access to all of the trades being shared inside of the group. So I mentioned that Bitcoin trade that I'm in. I trade FX, I trade currencies, I trade indices, I trade commodities, I trade a little bit of everything. And it is currently 45% off to get access to the group. So if you're not already in the membership group, come join us. Biggest sale of the year. We just kicked that off here today. The way to do that is use this link in the chat right now, and you can get access to our service. Nick, are there any free signals? No, there is not. Free signals. You get what you pay for in this industry. And we do our best here to show track records and reality. And if you're just going for cheap, free stuff, you're not going to find good stuff. People who have skills charge for their skills. Even when you watch free videos on YouTube, including mine, I still get paid for it through ad revenue. There's nothing free, and people who have skills and talent and track records should charge fees. They're worth something. So yeah, take advantage of the discount though. It is 45% off. That's our biggest discount of the year. Click that link here in the chat. Take advantage of that discount while it lasts, and we'll see you inside of the group if you're not in there already. And if I take any trades on pound dollar, I'm keeping an eye on it. It's on the watch list here today. I will update everything inside of the group there. Let's see what else. And pound yen was another one. If we get a bigger drop in pound yen, I'm kind of interested in that one. Kiwi dollar, dollar CAD. Dollar CAD has just been an unstoppable force here recently. I marked up this chart so long ago, this level of support for a pullback, and it just never pulled back. The trend is so strong here for dollar CAD. We'll see if that can stay the course or not. Yen pairs are getting some pretty bullish readings across them. Pound yen, CAD yen, Kiwi yen, dollar yen, euro yen. How's euro yen looking? I'm curious on that one. I like this pullback as well. A couple currency trades. Been a minute since I've had so many currency trades actually looking decent. So I like euro yen possible setups there. If I'm still getting the reading on the EdgeFinder, I may take that trade. We'll see. Don't be fooled by this NFP release. I think you just take it into consideration. That is how we do all economic data points. Overestimating any singular one is, in my opinion, a bit naive. We want to look at this data point. We also want to look at PMIs, GDP. We want to look at retail sales. We want to look at all of it and build an educated guess of where things might be going next. Don't miss it, guys. It is our 45% off sale. I'm going to step out of the stream here for a second. We got our next guest taking over the show. It's Forex James. He comes on a frequent basis now, one of our most heavily requested guests, actually. He's going to be taking a look at some technical setups and ideas that he is currently watching. So don't miss it. Forex James taking over the show in just a second, right after this quick break.
Looks like we're receiving a transmission. I think it's an alien, which is pretty cool.
Okay, all right, I'll go check it out. Beam me up. Whoa, hey guys, I come in peace.
Hey, you're back. What happened?
Well, they gave me this.
The A1 Trading Stock Box, an advanced market scanner of top stocks, ETFs, insider trades, and analyst ratings. Unbox smarter insights and discover opportunities with powerful data at your fingertips. Get your stock box today with our out-of-this-world Black Friday sale happening all month long.
See ya.
See you later.
Hello, hello. How's everyone doing? Hope you're all having a great end to the week. NFP, huge number. Well, actually, really not huge number. Huge release though. 12K. You know, what can you really say about that? So I know there's lots of speculation around NFP. So this is Financial Juice. It's a free service. There's no affiliate there or anything. So the hurricanes had no discernible impact on the on the jobless rate, unemployment. Obviously, unemployment stayed at 4.1. It's not possible to quantify effects of storms on payrolls. So essentially, it doesn't really seem like there's much behind NFP. I agree with what Kenzo said. Actually, I think we might get a revision next month. I don't really see 12 as it just doesn't really seem possible. But obviously, I'm not one of those super genius analysts, so we'll see. But we've got to do what we can. So the dollar obviously reacted pretty negatively off that news. We had, let me just change this here. Obviously, NFP at 12, unemployment stayed at 4 or 4.1. So yeah, we had an initial dip. However, it seems the dollar's actually not doing too badly off of that news. We do obviously, like I said, have the unemployment rate to sort of bolster the dollar slightly. Euro dollar is also on my watch list, so Nick speak about that very briefly before I came on. Recession incoming, recession. I wouldn't be screaming recession just yet. We'll see how things go. I'm not. Yeah, don't be one of those people trying to predict recessions and things. You can lose a lot of money by doing that. So euro dollar bouncing off this level of structure through here. That was a really bad drawing. Through here, we've also got price rejecting this 200 moving average. So technically, it looks really good. We do still have relatively poor data out of the EU, sticky inflation. We've got the ECB cutting rates along with the Fed. Now, the slight hiccup here is the main driver behind my bearish euro dollar positions has been based on the policy divergence. Obviously, we had very aggressive or projected aggressive cutting from the European Central Bank, and it was more forecasted we were going to get a 25 basis point cut from the Fed. So we obviously had that aggressiveness with the euro and not so much with the dollar. However, after today's NFP, that might change. So the Fed watch tool actually hasn't changed really. So we've gone from a hold, which was, hanging around sort of 5%, is now 0%. We've got a 99% expectation of 25 basis point cut and a 0.6% expectation of a 50 basis point cut. So we'll see how that develops. Obviously, we need to take it on a data by data basis. So overall, this trade remains relatively intact for now. So yeah, we'll have to monitor it. So Not in this position yet, but I am waiting and watching. Maybe after the next H4 candle close, if we can get a nice bearish candle, I'll look to execute here. Similar thing on pound dollar here. So we can see pound dollar is reading bearish on the EdgeFinder. Actually, that leads me into a good plug. So A1 has I think it's what, 40% discount for Black Friday. If you use code ELITE, you can get 45% off. There you go. That's a little bonus for you guys. If you want that extra 5%, you can use that one. So yeah, euro dollar is not on here anymore. It was. Pound dollar has creeped on again. This one wasn't on here previously. All of the indices apart from the FTSE have disappeared as well. So it leaves us with essentially just currency pairs. We do still have Bitcoin, and as I said, we've got the FTSE. Other than that, it looks quite good. So it's seeming very bearish on the yen. So we've got pound yen, CAD yen, dollar yen, Swiss yen, New Zealand dollar yen, euro yen, all having bullish signals. So we can take a look at some of the yen pairs later. We had NASDAQ buys. Yeah, I'm not in NASDAQ. I know that we were talking about NASDAQ yesterday, so we can have a look here. I just didn't see the reactions I wanted off this level. So if you weren't in yesterday's stream, what we were doing was looking basically in the area that price is currently at. So we had the 200 moving average here. We've got this level of resistance. Oh, sorry, level of support. We had the RSI oversold, but I just didn't see this H4 setup I wanted. So actually, in hindsight, I probably would have entered this off this H4 candle here because it was a strong bullish candle. But yeah, I missed it. So luckily not in this trade because it wouldn't be ideal right now. So yeah, there you go on that one. Lee says, James, have I what, Lee? So no, I'm not in any trades right now. Completely flat. I actually just lost a trade on silver, so I was short on silver for a quick sort of day trade. Obviously, we got taken out of that one on the news. So we can go over dollar yen. Technically, it looks quite nice. The issue I really see here is the weekly. So I don't want to really buy into this. So what we've got is a level through here. We've got this structure along with this weekly candle right here looking pretty bearish. I don't want to buy into a bearish weekly candle. It's actually just turned bullish, but it's still, in my book, this is still a bearish candle. So I'm not a fan of buying into that one really just yet. Along with the daily candle obviously being impacted by news, the H4 and H1 look fine. So let's just have a look here. So yeah, really, I'd be looking for some sort of deeper pullback here. I'd want to see possibly this 50% or this fib zone get touched into somewhere into here would be ideal. Now, whether we'll get that or not, probably not really. But that's kind of the only place I can see right now that I'm interested in, unless we get, let me just delete these things here. Unless we can get a very nice close, retest, a break, a retest, and continuation. I might also buy in there, but yeah, for now, there's nothing to do on dollar yen. It's kind of in the middle of a difficult position. Gold, we can have a look at gold for sure. So I did catch gold actually yesterday. So we were talking about gold. Let me pull it up so I can show you guys here. Yeah, here. So I caught a very short-term trade. It was just on the 5 minutes. Caught a quick scalp up. Made decent money on that one. So yeah, did execute on what I said I was going to yesterday. I didn't hold it. Obviously, we had the news today. I wasn't looking to really hold into that one. However, let's see here. So we have rejected our fib level. We've rejected this 50 moving average. RSI was oversold. So yeah, it still doesn't look like a bad setup. The problem is, for me right now, it's just a little bit risky. I also don't really want to go into this this position here for just a 1 to 2.5. I'd rather wait until Monday, let today's news digest. And obviously, we do have more news coming out later. So we've got, what have we got here? We've got the manufacturing PMI. manufacturing PMI, and manufacturing prices coming out. So yeah, not looking to take any dollar trades really for the rest of the day. Although gold to the upside still does look good. We do have elections obviously coming up. Is it next week? I think elections are. So that may cause some volatility that, again, I'm not sure I really want to be involved with. Australian dollar, euro, Australian. Yeah, we can have a look at those ones. Similar thing, really. I'd want to see a pullback. Although I am a fan of going short here, we could wait for a very similar setup to what we saw on, or what's currently going on the euro dollar. We could wait for this pullback into the level of resistance, wait for this sort of break and retest. We could let the 200 moving average come and meet here, and then we could look to go short off this level here. Now, the Australian dollar stands in a sort of bearish category for me. And the reason I say that, this is a little bit of source, and I'll probably give you more on this when we get close to the elections. But if Trump gets in and his tariffs start coming into play for China, that will then affect the Australian dollar, because obviously the Australian dollar and China are quite tightly linked. They're very correlated. So normally what's negative for China is negative for the Australian dollar, generally speaking. So this position actually might be very, very good, depending obviously how the elections go. So it's definitely one to keep on the watch list. Euro, Australian dollar as well, similar thing. So yeah, I wouldn't really want to take this one. I think we've got two pretty weak currencies, especially, again, talking about the Australian forecast rather than what it's doing right now. I'm not sure I really want to hold the Australian dollar, especially to the long side, just in case Trump does get in and that sort of, I'll say, prediction plays out. Euro, again, I'm not really bullish, or I'm not really bullish on the euro, so shorting it makes sense. But you know, if you want to short it against the US dollar at the moment. James, you have a discount for your signals? Yes, we currently have 50% off for Black Friday. I will be completely honest, kind of copied Nick with that one, so that discount's running at the moment. Let me just read the chat and catch up on what I've missed. Dollar yen, covered dollar yen. What's your thoughts on pound Australian? It's a good question. Let's have a look at that one. Here, pound Australian. So similar thing again with the Australian dollar. So I won't go over it again, but the pound actually has some relatively redeemable qualities. So it's not particularly strong if we look at it compared to the US dollar. However, if we are expecting Trump to win, and I don't know if he will, you know, I don't lean either way. I don't care because I'm not in America. But if he does win, it will likely have a negative impact on the Australian dollar. And the pound, the rate cuts by the Bank of England seem to already be priced in as far as I'm aware. So this doesn't seem like a bad position at all, actually. We've just bounced off this level of structure really nicely as well, which unfortunately I missed. So I would like to see a slightly lower pullback and maybe buy into this sort of descending channel, or the short-term descending channel, to then capitalize on the overall sort of long-term trend. I'm curious as to what the charts are like on election day. Actually, this is something I was going to show you guys. So I marked this up for you. And I'm glad I read that message because I almost completely forgot. So I've marked up all the election reactions here since 2000. So let's go back and have a look here. So this is the 6th of November, the year 2000. The election day to the peak, we had a 2.5% move to the upside. Then we had an 8.5% dump to the downside. Then in 2004, we had a almost 6% move to the downside. In 2008, we had a 4% move up, followed by a 10.5% move to the downside. This is 2012. We had roughly a 2.5% drop, followed by a 5% rise. This one was 2016. This was particularly rough, actually. We had a 5% rise, followed by a 14.25% drop. Then in 2020, so Trump, it was actually relatively flat. We had a 4% drop followed by a 4% rise. So it's pretty irrelevant, really. So feel free to take away, take whatever you want away from that. It seems to me, though, generally speaking, from an election, we can expect to have a couple of bearish weekly candles, or a bullish period, followed by a bearish period that seems to outweigh the bullish. So that's kind of what I'm going to try and play on. Whether that will happen, I don't know. Obviously, it depends on what the economics also supports, but it's something to keep in mind. It's always good to have data. And obviously, it's only short term. It's only going back to the year 2000. You could go back all the way and see more and get like ChatGPT to try and build you some sort of analysis or something. By the way, GU looks decent. Also, it's on the EdgeFinder. Yes, we just looked at GU here. So I am waiting for something here. So it looks great. So this is my technical strategy, or my day trading technical strategy perfectly. It's just rejected our 200 moving average. Price open below our pivot points. We've got the RSI oversold. Statistically speaking, price should close back in sort of this area, maybe reaching this support level again. So I am just waiting for a 15-minute confirmation, which I can actually, we'll have a look on the 15 here. So yeah, I'd like to see a nice, strong, bearish 15-minute candle close, and then I might execute. How is my prop firm? Prop firm's doing well, 3.8% up on the account. So over halfway now. Had some nice wins. Actually, I just realized I had my silver loss. So this will have gone down now, actually. 3.2. So still doing pretty well on the account, really. But yeah, still phase one. So I'll keep you updated on that one. EUR USD looks like a buy. Are you able to talk about NZD pairs? Yeah, we can have a look at some New Zealand. So New Zealand yen is on the EdgeFinder bullish. Stuck in a horrible range, actually. I've not really checked this. I don't trade the New Zealand dollar too much. The most I'll really do the New Zealand dollar is New Zealand dollar against US dollar. Don't pay attention to it, really, other than that. So I really don't like the way it's rejecting off this sort of resistance level. So more just pull it onto the sideline. See what else we've got going on. Let's check New Zealand US dollar. I would also expect this one to continue its decline over the longer term. So you can see I've got two long-term take profits here. So we've got the 0.59148 level. Then we've got the 0.58686 level. So that's where I would look for, really. But then again, I'd like to see some sort of pullback here. Whether we just come up again and again, so what I spoke about with euro dollar, we have some sort of pullback here to come and meet this 200 moving average and then continue to the downside. That would be great. So yeah, we'll see. But New Zealand dollar overall, it's not particularly notable in any way. Love from Philippines, love from the UK. What are your thoughts on pound New Zealand? Just get rid of these drawings. Pound New Zealand here. Yeah, so actually this break and retest here did happen. It just took a bit longer than I was expecting. So yeah, I would be, again, quite happy to go long. Similar thing that I was speaking about with the pound Australian dollar, in terms of the pound isn't weak enough really to be a concern unless you're trading it against the US dollar. The New Zealand dollar, again, is tied to China with the Australian dollar. So I'd be quite happy to short this one. Going long on this pair, but short on the New Zealand dollar, especially if we do get a Trump win. But yeah, overall, there's nothing particularly notable that I can find with New Zealand dollar. So euro yen, yeah, we can have a look at that one. So yeah, you can see here it's got a score of 8 on the EdgeFinder, so it's automatically looking to buy this one. So I'm not in this position, luckily. So yeah, as I was saying yesterday, or basically on all of the yen pairs. For now, my standpoint is we could expect to see a full correction of this move. When we had the unwinding of all the carry trades, we had that sort of brief flash crash, I guess you could call it. Yeah, it wouldn't surprise me if we do see a sort of continuation to the upside, really, as the yen seems to continue its decline. We're not really seeing any factors to support the yen at the moment. The euro, again, is quite weak in my eyes, but if we look at it relatively towards the yen, it's an outperformer, really. So let's see here. What could we do? I actually wouldn't mind going long if we can get slightly lower and sort of retest this support level a bit more. I'd be quite happy to buy this one and sort of hold it for the next couple of months and see what happens. Russell on the daily chart, technically at least, looks like a textbook setup. Yeah, I suppose you could just buy support really here. Yeah, it doesn't look bad. I don't trade the Russell, but I do pay attention to it just because it's an interesting thing to see. But yeah, I wouldn't be opposed to a long position, something like this, especially if the rate cut narrative is going to continue and get more aggressive. So if we see sort of continued weaker data that does signal towards another 50 basis point cut, then the Russell might be quite a good long position. But for now, yeah, 25 is kind of priced in my eyes. Thank you. I'm long pound New Zealand. Thank you for confirmation that I'm good with my long. Yeah, no problem. Euro pound. Yeah, Euro pound's been an interesting one. I've been waiting to get in for a while, but I just haven't really done it. So I must have deleted my analysis here. I did have a trade lined up, but yeah, I just didn't execute on it. Let's see. Yeah, it's too late for me to get in now. I would have liked to have gotten in where we saw the rejection. So yeah, it seems like we're on basically just a corrective move to the downside now to obviously correct the move to the upside that we had. Let's see. With the way things are going between Europe and the UK, it wouldn't shock me if we can see lower prices, possibly down to somewhere around the 0.82375. The issue is, yeah, Euro pound's not on the EdgeFinder again. It was at one point, but yeah, it's disappeared. So unfortunately, it's a no-go at the moment. I took a buy on Swiss yen before the news. It was a bad idea. Let's see. I don't know what Swiss yen's done. Oh, yes, I see. That might have been a bad idea. Although it might be setting up for quite a nice buy. Let's see what's going on the daily. Yeah, I wouldn't mind buying actually at this level. If we can get a very simple break and retest, that would be ideal. We've actually almost fully corrected as well, which is nice. See, it shows we've got a decent amount of buying power in this market. So yeah, buy from here, take profit slightly higher to correct, stop loss at the previous lows. This looks fine. So if we can get slightly lower, and this probably isn't what you want to hear, but I'd be quite happy to go in for a long position there. NFP is all red. Why is gold still going down? Profit taking. Very simply, there's nothing really for gold to. Well, gold's actually not going down, really, is it? It is, it's had a bullish reaction here. We've moved up almost one. Well, actually, hold on. Yeah, we've moved up 1.1% since we've had yesterday's move. So I wouldn't say it's moving to the downside. But yesterday's move does seem like profit taking. There's not really anything else I can put towards that move. Swiss yen looks to be making a deep pullback. Yes, that's right. Yes, but on the news. Well, gold had a bullish reaction to the news. That's what these wicks are. But it just wasn't sustained. Don't forget, gold. The dollar's also moving to the upside. Although we had really bad NFP, we did have, neutral unemployment. We still got news coming out in 20 minutes and more in half an hour. Oh, sorry, in 4 minutes and more in 20 minutes. Yeah, GU's continuing its climb. Let's pay attention to euro dollar. I'd like to get into this one. Delete that. Yeah, likely won't get into this one today. It'll probably be a trade for Monday. And again, let the market digest and see what happens. Could euro pound reach 83,500 today? Let's see. What was it? 83,500. Yeah, it's possible. I wouldn't say. Actually, yeah, it wouldn't surprise me if we could reach there. The main stopping point is kind of where price is at. So if you start seeing rejections around here, then yeah, I wouldn't be surprised. But again, also wouldn't be surprised if we do reach your target. Gold reacted off the POC. We had some buys. H1 30-minute confirmation. Yeah. So pound dollar, I'm still looking to go short on pound dollar. I'm just not satisfied with it right now. Maybe if we can see a reaction, if we can see a bearish reaction from here, that would be kind of the only place I would get short. If we break above this, then I'm not interested. And that will be, again, one for probably the week after or next week. So which news comes out in 2 minutes, so I'll put that on the side here. I think Nick's coming back on at some point. I'm not sure when or if he actually is. So we'll see. Might have Nick's commentary on this news as well. Cool. Okay. So we've got manufacturing PMI. It's actually expected to come out at 47.8. Forecast is 47.8. Oh, sorry, previous was 47.8 and forecast is 47.8. So I wouldn't expect too much of a move here, really. Dollar's gone back to being flat as well. Pound dollar did not break structure. Well, it's not broken this resistance yet, but it might do. I like how EU is slowing down on the bullish side. If there was a break, we might have some good sells next week. Yes, exactly. I think the moves we're seeing today on the dollar pairs is just a good opportunity to get short again. My bias hasn't changed for the short term, but again, maybe next week I'm just going to hold off, foot off the gas pedal, and maybe wait to see what really happens. Because as we saw earlier, it's not uncommon to start seeing quite strong moves to the downside on the dollar. The low of 266 did not break this low. Let me see what you're talking about. So the low of 1.2660. That's not what it was. Was it? Unless you're talking about something else. You might be talking about euro, I'm not sure. But yeah, I think that's fine. So we've got 1 minute. Let's put candles on here. We'll go down to the 15 as well. Yeah, so dollar's actually almost recovered the full move from NFP. It was only small, really. I was expecting a much larger move. It's only a 0.38%, which is kind of crazy. So yeah, we've got 15 seconds. Scared me. Siri just went off. Maybe jump. Okay, so it came out at 48.5, which is obviously higher than expected, higher than forecast, higher than previous. Little reaction on the dollar so far. As I said, I wouldn't expect anything too huge off this. Yeah, moving to the downside, but very slowly. So yeah, nothing really too important there. We've got more news in 15 minutes. Oh, did you guys hear that? Rude Siri. Yeah. Cool. Okay, so that news was really interesting to watch. I'm glad I sat there and wasted time doing that. So, yeah, I mean, let's have a look. Actually, is there anything going on? Oh, S&P is moving nicely, actually. Interesting. I wouldn't mind buying the S&P. Let's see here. It doesn't line up perfectly, which is a bit annoying. But yeah, I wouldn't mind buying the S&P. Problem is we do have this level of resistance, so it could quite easily act as a break and retest to move further to the downside, which I don't think will happen. But obviously, as traders, you got to be planning and looking at every situation, not just the one you want. James, does Elite Traders have discount? If I join, do I see a prop firm trades? Yes, we currently have 50% off. That discount lasts forever. So if you join now, you'll have 50% off for the whole of your membership. And yes, you see every trade I take. Is your earlier strategy the one you use for your trading? I use both of my strategies here. So this, I use a swing trading strategy, which involves the fib. Oops, that's not the fib. The fib here. So for example, here, if I, hypothetically, if I was looking to go short, I'd want to see price react at this fib level, come up, retest here, close bearish engulfing, and continuation to the downside. And that's it. Obviously, I apply fundamental analysis and the EdgeFinder and things, just to obviously back up those trades. Then my day trading strategy involves pivot points, the RSI, moving averages, and just following the trend. Yeah, don't pound New Zealand. Don't worry. But yeah, I think it's good to have an ability to adapt to the market. So for example, the reason that I have a day trading strategy is for periods like what we've seen recently, when we have really strong macro moves, or macro driven moves, I should say. So for example, here on euro dollar, there was no way I could get into this as a swing trade. However, when I go down, even on pound dollar here, I can just capitalize on those moves in a shorter time frame, still make 2-3%, and not have to wait days or weeks for these types of pullbacks here. So yeah, staying adaptive is good. Cool. Okay. Let me just check something quickly here. Oh, cool. Okay, so Nick's on after me. Is Nick here? Is it 9:45? I think I might have run on too long here, actually. I'm not sure. I'm used to having an hour. Either way. A1 guys, pull me off. I'm not sure if someone's waiting for me to finish or not. But guys, in the meantime, if there's any final questions, let me know. I might be on for another half an hour. I really don't know how long I'm on today. But yeah, let me know if there's any questions. Happy to have a chat. The US dollar is starting to move back to the upside. Wouldn't surprise me if we do see a correction here, back up into this sort of zone. So more leaning towards the rest of the day being relatively bullish on the dollar, which would actually back up this GU short, so I wouldn't mind. Let's go into the 15. I wouldn't mind selling around here. Actually, stop above there, take profit down at support. Something like this would actually be really good. So we'll see if that happens. Next week, XXX USD pairs are going to be bearish because of the elections, right? That's a good question. Let's have a look. So let's delete these. Let's go to area, put it on the weekly. So lead up to the election was bearish here. So bearish, this was bullish. This was bullish. This was bullish. This was bearish. This was bullish. So far, it seems like actually the dollar gets quite bullish. So yeah, your idea is right in terms of bearish XXX USD. Wait for GU sells after engulfing. Yep. What's your 15-minute confirmation? Is it a break of structure, shift of momentum? None of that. It's just, yeah, if we can see a bearish candle close, that's my confirmation. It's very simple. So an engulfing candle is ideal, but sometimes that doesn't work for me because let's say I want to short here and the next engulfing candle would obviously need to be down here. So I don't want to go in for a sell and do something like this because it just ruins the R&R. So sometimes I have to take more of an aggressive entry and just wait for whether it's a doji or if I see the current candle have a lack of momentum, I'll just take an aggressive entry. So yeah, it's a bit discretional, but generally speaking, it all follows the same idea. Can you trace this liquidity line for pound dollar? Patrick, we trade in very different ways, but I'll try and take a look. It's not my cup of tea. So 1.2445. Why is that not working? 1.2445. There we go. Okay. Are you trying to look for liquidity down here? Interesting. Yeah. Yeah. Like I said, it's not my favorite way of trading, I'll be honest. GU is the next previous range of control, max volume. Yes, I agree. I think now is the time where if GU is going to go into sort of a seller's market again, it's kind of got to be now. There's not really anywhere else for sellers to come in. Well, obviously I say that's a bit of a silly thing to say in general, but hopefully you understand what I mean. So we'll see how it reacts here. Look on the daily time frame. Okay, let's have a look. So down here, it's just a wick. I mean, you could say the same about, everything really. You got here, you got a wick here. There's a wick here. There's a wick here. You see what I'm saying? So yeah, that's just why it's not really for me. It doesn't make sense. But I always say if you make money trading the way you trade, it doesn't matter what I think. The goal is to make money. No one can sit there and tell you you're wrong if you're profitable. Although, you could say the same about Donvo. Look what happened. Yeah, if it breaks that level, it's going to be harder to short with safe stop. Yes, I agree. I don't think I will short if it breaks here. Euro dollar's moving nicely from our level. We've got 3 hours until the next H4 candle close. So yeah, it's Yeah, I'm not sure. I'm tempted to go for just a very aggressive move here and just play it, see what happens. Or, in my book, the economics are still to the downside, the trend's still to the downside. This is just a healthy pullback. So if I get stopped out, I'm fine with that, because the idea for me is completely fine. NFP release is just a bluff. Yeah, I mean, it doesn't matter whether it doesn't matter if someone sat there in their office and typed in 12K for a joke. It's completely irrelevant, because that's the numbers we've got. That's the numbers the market reacts to. That's what we've got to play. You can't sit there. Well, you can sit and say it's a bluff or whatever, but that's not going to help you trade. So it doesn't matter really in my book. If that's what it is, that nothing I can do about that. 5-minute on manufacturing PMI. That is true. We can watch that one as well. Hopefully this one won't be a waste of time to watch. Maybe we'll get something interesting. Let's pull this over here. On EU, I think if we break 1.08526, we might continue lower. Yeah, I think EU still has a lot of room to the downside. It just hit a strong technical level. Here, let's have a look here. Yeah, so we hit the strong technical trend line, sort of failed to break below, induced some buying, retesting resistance. Now I think we're in the clear really to continue to the downside. Yeah, doesn't really bother me. Cool.
What's up, James?
Hey, Nick, how are you?
I'm good. I like the euro dollar idea. I've tried to get in early on, or I got into the euro on the short side. I was just a little early. Well, actually, maybe a lot early. But it's kind of one of those things. The euro has been such a downtrend. This one's been tricky because I've been wanting to short it, but like just no pullbacks, right?
Yeah, no, it's been very difficult.
Yeah, it's been like this just perpetual downside move. I took a stab on the 4-hour chart, and sure enough, I did a great job at pretty much calling the bottom. But I mean, it did go down initially, but then spiked off of that low. But we'll see how this plays out. One key level I have on the euro is this one right here, 1.1020. It's a pretty obvious level of broken support, but it's a ways away. And I'm not going to, that's not the only place I would try on the euro. If I can get good setups on pullbacks, I like that. I like that idea you were marking up as well. So we'll see. What do you think about that jobs data? That I saw you come on and kind of laugh at it. It's kind of funny.
Yeah, I mean, it reinforces the rate cut narrative, but that's kind of already been in play. As far as I'm aware, the 25 basis point cut, it's already priced in. It's expected. The CME FedWatch tool hasn't changed really. The hold, it was 5%, now it's 0%, so not much change. Yep. 0.6% on a 50 basis point cut is not really that relevant right now. So in my book, although it's a bad number, nothing's really changed in the sort of broader landscape of rate cuts and things.
Yeah. And that's the thing is, the thing is, I was looking at this jobs number, and it's like on the EdgeFinder, you can't even see that. I'm like, where's the data point? The data point's missing. And then I was like, oh, wait, no, it's way down there. Just a complete whiff in terms of jobs data. Frank, another one of our traders here at A1, sent me a DM. He's like, is that even real? And I was like, I don't know. They're probably going to revise it like crazy, like they've been doing all year. Not a good year for the Bureau of Labor Statistics. They've been all over the place with their data, and people are probably not too happy with that. But forecasts were way off. But I don't know, man. We'll see how that plays out. I agree with you. It's probably just kind of stay the course with the rate cut game. It's probably still coming. That being said, at the same time, unemployment rate remained unchanged. So, kind of a mixed bag there. It would be a different story. You'd have a really ugly day in the markets if you had like huge jobs miss plus unemployment rate spiked. That'd be dollar down massive. And then I'd really feel some FOMO on the euro.
Yeah, no, that would have been a bit. Yeah, it would have been bit of a mess. But there's not much we can do really at the moment other than wait for these pullbacks on euro dollar and pound dollar. Really.
Yep. Speaking of which, in terms of news, we got about 10 seconds to go. We'll skip our breaking news here today, but or for this one, but we've got ISM manufacturing PMIs. That's why I hopped back on the call, coming out here in just a second. Let's see what these bring. Could be interesting. Manufacturing, of course, is a considerable chunk of the U.S. economy. Came in light, 46.5. Not as nearly as big as services PMI. I make that point every month. But manufacturing data just came in slightly lighter than forecast. Forecasts were 47.6, 46.5. This is more contraction in the manufacturing component of the U.S. economy. This has been going on for like years now, by the way. For the last few years, we've barely ever gotten above 50, which for PMI newbies, anything above 50 is a show of growth, and anything below 50 is a sign of contraction. We've seen the manufacturing part of the U.S. economy contracting for years. Services, however, has been strong. So we've got services coming on Monday. One of the most, in my opinion, one of the most important pieces of economic data points to watch is the U.S. ISM services services PMI. Got that on Monday, just shortly before the big Fed meeting stuff. So we'll have to keep an eye on that. Let's see if that did do any movement on the market. We got dollar index, 5-minute chart, nothing too big. Let's see what else. Bitcoin's up still, oil flat, copper. Do you have any commodities positions right now, James? Do you have any copper, silver, gold, oil?
I was in silver this morning.
Yeah.
However, that was unfortunately stopped out during the NFP reaction. But I'm still considering re-entering this one. Yeah, we'll see. I mean, I'm not sure I really want to get into too many dollar positions, especially on commodities, before we have the elections. Because as I was saying earlier on stream, if Trump wins and these tariffs start affecting China, which is likely, we'll see the Australian dollar start heading to the downside, which is obviously linked to commodities, and it obviously ripple effect in the markets. Maybe not silver so much, but copper and things. So it'll be, I'm sort of on the sidelines for now.
That's a great point. I mean, commodity prices, depending on how the market interprets what those tariffs could mean, as well as how they potentially actually start to impact or not global, trade, etc. If we think back, I'm actually just curious. Let's go back in time for just a second to 2018 on the price of copper, when we had the trade war stuff going on with Trump the last time around. You can see copper prices had a big drop that year. So, we'll see. That, of course, does kind of poke around the international trade stuff. So could be something that we're talking about next year. We'll see, James. I mean, there's always something, of course.
Yeah, exactly. There's something I wanted to ask you as well, Nick. What do you think the reaction to gold will be after the election? So I know that obviously gold's been pumping quite nicely due to elections, obviously allocating capital towards risk-off assets. Do you think post-elections will be more of a risk-on play for gold? Do you think we'll see lower prices, or do you think we'll continue the steam train to the upside?
Well, I was thinking about that actually this morning. I think that there's sort of two parts to it. Yes, I think that there is a premium being applied to the price of gold right now. Like, people are paying a premium because of the uncertainties with the election, Middle East, yada, yada, yada. But then there's also the way U.S. elections function, which is there's not like a clear, like on November 6th, we won't know for sure who the president is. And then there's like this period of time where everybody's kind of like, what's going to happen? Question marks. So I actually think that, until the actual next president is, given the keys, basically, I think gold will keep that premium. So even if, at this on November 6th, November 5th, there will probably be volatility in the price of gold. But I don't think that there's just going to be a complete, like a balloon popping loss of premium in the price of gold due to the election, because I think the uncertainty does not go away on November 6th. I think the uncertainty is there until things truly settle into 2025. So I don't really see a short-term massive downside catalyst on November 6th after the election night. I kind of lean more towards probably should keep a little bit of a premium for a little while here until some of it is truly behind us. So that's kind of my opinion on it. I think 2024, the rest of gold, the year for gold, still looks most likely stronger. Fed's still going to cut rates. They're going to see the presidential election stuff. That being said, once some of these question marks get answered, then I think gold very well could be discounted some from its current premium levels.
Yep. Okay. Yeah, sounds great. Cool. Yeah, we were talking about that in the Discord this morning. So yeah, just wanted to get your thoughts as well.
Yeah, it's an interesting one. Gold is pumped so far that it feels like it needs to have this sort of deflating event at some point, and it probably will. It's just that still is a difficult thing to time. I don't think it's as easy as November 6th. Okay, we're done. I think it's what's going to happen in the Middle East, and what if even if Trump is given the keys, what does that actually mean for global politics? And I'm not trying to get into like personal politics in any way, but if you think about people like to point out that under him there was a lot of peace, but at the same time we're in a different environment than we were when he was president last. People don't just follow the rules of the US president completely. Like these countries, Israel, Iran, Taiwan, China, they all have their own agendas and things that are going on. So it's not completely the president's fault or ability to control global politics like that. So I don't know. And the trade war thing, if that comes back, we'll see. I mean, there's interesting times. I think regardless of who you get as the president, there's going to be concerns and there's going to be things that people are excited about. That's every time how it is. And in terms of just purely a market's perspective, I do think that the handing over of the keys to whoever it is, whether it be Trump or Kamala Harris, will be a welcomed thing by stock market investors, because they'll say, okay, great. If it's Kamala Harris, great. We know we can do this. And if it's Trump, okay, great. We know we can do this now. Like, I think it's just the uncertainty, the unknowing of who the president's going to be is worse than actually just getting one of them.
Yeah, no, I completely agree. It's that, the uncertainty. Investors hate it. So,
yes, for sure. Well, James, I'll let you go. You've been taking over the stream here for a while. I appreciate your time on the show here. As always, what we want to do is thank our guests by sending you guys, if you have not already, to go subscribe to Forex James. He's got his own YouTube channel. He's got great free value on there. He's a proud EdgeFinder user. He's got a promo code. James, what's your promo code? It's Elite, right?
Yeah, just Elite. Yeah, 45% off, guys. If you want to claim that one.
Yep. If you're interested in the EdgeFinder, you can use and enjoy his James commentary. It's a great way to support him. Great way to support the show if you're interested in getting a copy yourself. Okay, James. Thanks, man, for coming on the show. We'll see you on the next one.
Thank you, Nick. See you later. Have a good day.
See you, man. All right. Guys. So got a few minutes here. I think we have Chris Pulver coming on. I could be wrong about that, but I believe we have Chris Pulver coming on momentarily. Jobs data updated in the EdgeFinder. What are those? Basically, let's play the meme. Like, what are those? Like, that is crazy. Big, nothing in terms of jobs added report. That being said, I made a very important point that I said earlier. One of the biggest frustrations about fundamental analysis for people who are onlookers, some of the big criticisms of fundamental analysis is you can literally look at what you want to see. Everybody has biases, right? You can say, that jobs data is not so good after all, is it? But then you're just ignoring that unemployment rate actually stayed stable. Or you could do the opposite. You could say, this is nothing. This is great. Like, you can do what you want here. I encourage you to try and keep things systematic, AKA build something either systematic or make sure that you have a very specific rule set for determining systematically what this report really shows you. How does the EdgeFinder score what happened today? Let's take out the biases as much as we can. Let's use software to take out the bias. This is actually like low-key such an important point. Stop trying to do this off the top of your head, because if you just read this report, the problem is you and myself will start to build your own bias on what this data tells you. People do this thing. We all do this thing. We tunnel vision what we want to see, and you have to be careful doing this. Let's break down how the EdgeFinder actually scores this so we can be smart about this. What does the EdgeFinder say for the dollar? Let's do USD. How does the EdgeFinder actually score this report in terms of bias towards the US dollar? Okay, it missed. It missed here. That's a -1 score for the dollar index and for all dollar crosses. So it's a knock on the dollar. Unemployment rate. Did it beat, miss, or meet expectations? This is how the EdgeFinder is functioning, by the way. I'm revealing the secret, powerful algorithm that runs the market. Oops, shouldn't have said that. Just kidding. EdgeFinder is not a secret. It's not mystical powers. It's just economic data made practical. 4.1%. 4.1% came out. 4.1% was forecasted. Would this be a +1, a -1, or a 0? The answer is a 0. Why would it be a +0 for the dollar? Well, because it didn't beat expectations. We didn't go down in unemployment rate, which would have been really good for the dollar. And we didn't go up. So we just call it even. So what's the final score that the EdgeFinder without bias does? Dollar, slightly bearish read on jobs print today. Does this make sense? This is why people sometimes look at the EdgeFinder and they say, I could just, I don't need to buy that. And you don't. You could do what you want. You can watch these streams. You can watch these videos. They're free unless we go on vacation. Then you're playing with your hands like this and just, where's Nick? Don't be that guy. There are those guys. And trust me, you don't want to rely on me. Like, you don't want to sit here poaching the YouTube channel to try and get information and then frustratingly waiting for me to pull something up that you want to do, right? Just get the software. It's 45% off right now. Anyways, this is how we score it. So now when we go over to the EdgeFinder, that's how this category for jobs is getting scored in the underlying software. Hey, Nick, I've been using the EdgeFinder for the last 6 months and loving it. Would you consider adding a column showing when an asset updates? This will be helpful when planning a trade. That's a great idea, and it is one that is actually already in place. Let me show you. But maybe, based on your comment, we could find a better way to showcase it more frequently. But I'll show you something. Stock indices. See this right here? See this little thing? When you go into your individual scanner, if you're a stock indices trader or you trade gold or you trade commodities, as a user, I know, so you said you have it, just go into the data scanners page and click whatever you trade. And then check this out. This little Delta tab was built specifically for what you're talking about. So if you're very interested in the S&P 500, you can see a filter of a change of -3 just recently happened in the overall score. You can now pull that up and kind of break that down, right? So that is currently implemented. Maybe we can find some better ways to show it more frequently. 100% agree with you, Nick. I had a bearish bias on dollar yen after the news and technical outlook of the chart and look at it now. EdgeFinder was right, bullish. You just have to be careful because I make the mistake myself. I make the mistake myself of thinking I'm smarter than I am. And I'm pretty dang smart. Just kidding. I'm really not. But I actually think that when it comes to markets, really smart people do worse in a weird way. People are too smart. Like I think you have to have a level of being like, I am kind of an idiot to actually become a profitable trader. I don't know how to, well, I do know where that's coming from. If you think you're too smart, you're too arrogant, the market's going to humble the life out of you. But if you are like, yeah, I'm kind of an idiot sometimes, then you are more primed to enter the kingdom of heaven in the form of trading profitability. Across the Bible reference to trading profitability, this is a weird stream. You know what I mean? What's that saying in the Bible? And I'm not even super religious, so I just remember this from like church school or something. Remember, it's like the certain people can get into the kingdom of heaven that are more modest, or the meek, I think. Someone quote me real quick. Any Bible people, what is the phrase that I'm looking for? Anyways, not super important, relevant, kind of off the cuff, but my point is having a level of like, I'm kind of dumb, like, let me not like think I'm too smart here. Let me just check myself and make sure I build a system to keep myself in guardrails, is one of the smartest things that I ever did in my own, trading career. Meek will inherit the kingdom of God. There you go. Blessed are the meek, for they shall. Yeah. Again, we're not bringing religion into the stream purposefully, but that is a beautiful phrase, even on a secular basis. People who have modesty will reap the rewards of it. Arrogance like holds you back in a weird way. And there have been so many times in my trading career where arrogance has absolutely crushed me back to earth, like gravity times 10, like gravity on Jupiter. That's what arrogance does to you. Anyways, do we have somebody else coming on the stream? Am I missing that? Chandler and James, help me out. Do we have? I'm pulling up the live stream schedule. Don't worry about it. By the way, guys, you can keep up to date with the EdgeFinder. I'm sorry, not the EdgeFinder. The stream. You can always keep up to date. A1trading.com. Just click the live stream schedule right here. And by the way, while you're on the website, you can click this button right here and check out our Black Friday deals. Everything is currently 40% off. If you're watching the live stream right now, you get 45% off if you use the link we're about to drop here in the chat. If you want access to the EdgeFinder, access to our signals, access to the Pulver alerts, which we got Chris Pulver taking over the show here in just a second, all of it is currently on mega discount, 45 freaking %. It's our biggest discount of the year. Take advantage of the discount. Everything is on sale. This is the biggest thing that we do all year long. It's the biggest discount in dollar terms that we've ever done. So don't miss it. Okay, guys, we're gonna take a quick break, and then Chris Pulver is taking over the show. He's gonna walk you guys. You guys are in great hands with Mr. Chris Pulver. He's a stream thought leader here, a regular contributor to the A1 Trading Show, and he offers his own service collabed with us. It's the Pulver Alerts with A1 Trading. We kind of have like a collab co-op thing that we're doing. If you guys would like to see the trades Chris Pulver takes, if you're a regular stream viewer, they are also on mega discount, 45% off for live stream viewers right now. Is crazy. So stay tuned. You can hear from the man himself. He'll be right in the call in just a second. We're going to take a quick break to thank our sponsors who make this show possible, and then we're coming back to Chris Pulver. Stay tuned.
Where are we going again?
I thought you plugged it into the GPS.
Oh my gosh, what is that? What's happening?
Relax. It was a Pulver alert.
A Pulver alert?
Yeah, Chris Pulver. He teamed up with A1 Trading, and now you can see all of his trades, and it's all through Discord, so I can easily check them anytime on my phone or desktop. Plus, you can get notifications when new messages are sent.
Frank, that's really cool that you can see his signals, but why are you doing that when we're space traveling?
Because I'm bored and we have light years till our next destination.
Another trade already?
Actually, have no idea what that is. We might be in trouble.
Pulver alerts are now available on the A1 Trading website, and for a limited time, you can get them 40% off for the Black Friday sale event. Don't miss out on getting Pulver alerts for the best price anywhere in the galaxy. We're dropping the link to get Pulver alerts 40% off right now in the chat and the description down below.
Nick, Frank, you watching gold?
Roger that, Pulver. We got the alert.
Good stuff, everybody. Happy Friday. Trades are plentiful. I actually updated my Pulver Alert section in the Discord. We had 3 trades, 3 winners from yesterday. I did a final hour session on YouTube, got a trade in on Apple, took some profit, got a trade in on Amazon, took some profit, had a trade in on TEAM team, took some profit. All those closed out. What else do we have here? I'm going to take a small loss today on Coca-Cola. No big deal. I've got some expirations on Microsoft. Actually, I want to take a look at Microsoft this morning. So let's chat. Got a couple alerts set on Amazon. I'm curious. So what I did on this one, this was actually a butterfly spread yesterday. So the trade was at, I'm trying to think here. We were sitting around 186 yesterday at the close, and we jumped up all the way back up towards $200. So I put in a trade that was a pin at $200, and because it was out of the money, I turned a 13-cent debit into a 50-cent credit. Now that might not seem exciting, but if you go into 10 contracts, okay, I'm risking $130 to turn this into $500. That's not too shabby, right? So it's a very inexpensive trade to make a few bucks, which is kind of cool. So that was at Amazon. Apple, I did this on 2 trades. And actually, I'm happy that I took the trade this morning because it's sitting right back in between my levels. I looked to see if we got up to like 235 or we got down to 220, and I put the same type of trade on here. This is a butterfly spread, and we went down towards my lower level. I paid 21 cents here and 21 cents here. I think I paid 22 on the call fly, but I closed out for 50 cents or is like 55 cents this morning. So I took both trades off, walked away with a few cents net profit, called it a day. The other one was TEAM. This one is fading a little bit, but I just bought pretty much an at the money bull call spread. The 190 by 192.50 got filled for like $1.20 or $1.25 and ended up grabbing $2.40 credit, almost max profit first thing in the morning versus waiting all the way to today's expiration at the end of the day. So 3 quick trades, 3 quick winners. Obviously, that's great, and more to come. So in the, I know there's the Black Friday sale. I would definitely recommend, if I'm going to be on these sessions every single day, Nick and Frank, Elvin, everybody, I mean, all of us contributing and posting some trades. You want to be a part of that, then it's pretty easy, and offering up the type of discount that we're doing, it's pretty fantastic. So I do know that the link that are shared too, or if you're in my Discord channel, I have a promo link Pulver. Is useful if you have a coupon. There's like a coupon box. You can type in the word Pulver and save yourself a few extra bucks. Okay. All right. Let's chat about everything today. P&L on the day is pretty good, showing about $16,000 in profit. I want to see if I've got some trades. I did do some extra management this week. I did some rolls. Let's see here. JD, I rolled out, trading at 40.79. I rolled out, lowered my cost basis a little bit more. Pfizer at 28.41. I've got my covered calls out to 29, and next week I'm trying to get that called away at $29. And I think OXY, where's this one at? OXY at 50.34. This covered call is out to next Friday. Let me see what this is trading for right now. Close full. It's still showing 28 to 30 cents on the credit side, so I'm just going to let that decay. Hopefully oil just is stable. I mean, that is actually one of the few stocks that Berkshire Hathaway continues to buy is OXY. So I'm not saying that's why I'm justifying the trade. I'm saying that $50 is a pretty good support level. Oil support seems to be holding for now, but I'm watching that pretty closely. And if I get more aggressive on repairing the trade, I will. But I'm going to try to flip that for a couple $100 in profit. What else do we have here? URA, that's uranium. Walmart is up. That's fine. WBA is off those lows. Tesla, I wouldn't mind taking some ownership of Tesla. This trade is out towards the end of the year, December 20th expiration on that one. Snap is up to 1263. All I have is I took profit on Snap earlier. I bought the shares. I didn't cover anything on Snap. I just closed it out for profit around $12. So I did sacrifice a little bit of upside on that. but I still made like $4 grand this weekend snap, which I'm okay with. What else do we have? That's about it. RCL. Hey now, RCL looking a little bit better. I've got the 207.50 by 205 out to the 15th. I'd like to see some pressure to the downside on RCL, and that's a bear put spread that hopefully gives me some profit. I think I paid, wasn't super expensive. Let me go to RCL. Why doesn't it show me what I paid on that? Well, I guess I can figure it out. I paid $1.15. So $1.15 to make $1.35. And I need prices stay below 205 in 2 weeks. MO had a big pop to the upside this week as well, trading at 54.47. Wow, that's a big fat dividend play. MO, Altria, just one massive move with earnings. I mean, I'm going to lose the stock around $50. I bought it at $39.40. I am trying to roll this thing out and just continue to have this be a nice little dividend generator for me. But there's not much I can do to the upside right now outside of let more time pass because I've got these covered calls out to January and March. So that's 2025. Let's have a look top down today. Yep. So let's go SPY. I did add some credit spreads in on SPY and Qs yesterday. So looking at some of the averages we've been talking about here in the sessions, I like the, this is a 21 period exponential moving average, then a 50, then a 100, then a 144, then a 200. So we've had about a 3% pullback from the top, about a 3% pullback from the highs. I actually think this is a healthier look for the market to do this pre-election. That being said, though, jobs numbers today were not that great. I would say that I don't know. I'm curious what the market is thinking. Obviously, I'm always curious what the market's thinking. But if we have a seesaw of, okay, it's inflation versus employment, right? Let's just chat about that for a second. It's inflation versus employment. So we have employment here, and we have inflation here. Now, there's obviously a balance of how this market is interpreting, which is more important, because what we saw all year was inflation is most important. And then once we got into the summer months, we started to see that our employment numbers were looking crappier, and all of a sudden, all this started to shift into employment's more important. Fed's talking about cutting rates. We're getting closer to our inflation target. Still not done, but we're getting closer. It's blah blah. I mean, the language shifted so aggressively to say we're focused on employment now. Inflation's going the right direction. And then just these last couple of weeks, it's back to inflation again because we saw that the Fed cut rates by 50 basis points. They're looking to cut again November, December, and we've seen inflation go from, I mean, I'm looking at that true-flation reading at 1%, now up to 2+%. That's not a good thing. You look at the bond yields ripping to the upside by 60 basis points. That's not a good thing. Okay? Like this market is saying, idiots, inflation isn't over. Okay? Look at the 30-year mortgage rate. Went from 6.09 up to 7%. What the heck? You know, that will continue to crush the housing market. It's already an unaffordable housing market, but it will destroy it. I mean, we are going to see people that won't move out of their homes. We won't see any new inventory unless it's rental only. I mean, the house prices right now, people can't afford to buy it. The median household income, it's going to take 40 to 50% of your median household income in order to afford the average home price. And the rule of thumb by banks to get you approved on things is like 20 to 30%. You know, so inflation is not going away. And with the additional 2 cuts coming by the Fed, I don't know what that looks like. But the market is pricing in that things are going to be inflationary moving forward. And then you have non-farm today, and non-farm is another disappointing figure. So all that being said, I don't know. We're right back in this interesting spot where both things matter. I don't know if the Fed can navigate a soft landing when something's going to end up getting like the seesaw is going to end up breaking something. Okay. Plus, we have an election next week. And I would say that like it's no big deal because it's just run-of-the-mill election. But that election for next week could also not come with a full decision election night. Something tells me we might have, states that can't decide or states that can't tally the votes, and there's going to be questions on either side. Doesn't matter if it's a Harris victory or Trump victory. I think either side is going to possibly dispute the results, and I just think that's going to be volatile and choppy and indecisive for the markets, which nobody wants to see. So just potential drama ahead. Be cautious. I'm sitting here with lots and lots of buying power waiting to deploy. Okay. So am I up in the day? Sure. Did I have a good week? Yes. Do I have some buying power ready? Yes. If it melts up higher, fine. For me, again, a 3% pullback in the SPY is not, throw everything at it because that's a pullback I've been waiting for. It's not. Pullbacks for me, it's like I'm talking about 5, 8, 10% pullbacks. Then I start allocating more capital. Not 2, not 3. So this week has been income trades. So we've had some good winners. Overall, I mean, I think I'm not sure what the total is, but probably over 10 to 12 trades. I probably have, let's say I took 10 trades. I probably had 7 or 8 winners this week. I'm happy with that, but just moving the needle. That's my job. All right, let's go top down. If you got some requests, let me know. B polls. Let's get some confetti in there. Let's get some confetti for pulver alerts. Nice. Okay. So we did have a pullback on the SPY. We're bouncing off this 50 period moving average. I did put in some fresh credit spreads on that level yesterday. I'm still willing to test lower levels if possible. Futures, same thing. We broke the trend line. We're pulling back. Now, I don't know if breaking the trend line necessarily means like, oh, this thing's going down. Fudge, man. I've got an expiration on some of my hedges. I guess I just need to sit on them and not think about it as like I should have taken profit. I have some hedges out there still for next week that if we go lower, I do have a profit trap. Let me show you that trade really quickly here. So I do have a profit trap. It's an ES butterfly. So right here, 1, 2, 3. I believe that's it. Is that it? 3, 3. That's a November. Okay, this should be it. That's 25 and 30. That's so weird. It seems like I should have been skipping more. So that skips okay, so 15 and 30. Okay, so it was proper. It was a proper broken wing butterfly. So if I analyze this chart, can everybody see this? So this is real price right down here with this little flag. That's real price, this little flag that's floating around. So I'm in profit right now, and this is around $1,000 of profit. And so if price stays where it is, goes down further, or actually comes all the way up towards like 58.90, I still have $1,000 of profit. Okay. If price comes up to 58.85 or 58.90 by next Friday, this pays me about $3,500 of profit. So that is a hedge that is very cost effective. I've got some, good income there if I'm right and price just stays where it is or goes lower. But if there's a chance that price is trying to get back to these recent highs, 58.90 is quite a ways up in the market. So I mean, we'd be like really trying to sniff out all-time highs again by next Friday. And part of me for hedging sake, and this trade being a winner, I'm hoping that this is actually going to be, I'd like $1,000. Yeah, that's good. I'd obviously love a profit trap, which is even better. So just a couple trades like that are still running. So we'll see if this is a break retest. Amazon's pinned at 200. Let me see what that's looking like really quickly. Chart alarm's going off right now. Trade. We go Amazon. So that 50 cents. Holy fudge, man. So that butterfly that I took on Amazon is now trading for $1. I mean, again, this is a pretty good trade. I'm just going to throw this out there. If anybody didn't see the alert from my Amazon trade from yesterday, it is trading for like a 9x return. So a 13-cent debit, you can close it out for $1 right now. So $1, you make 87 cents on a 13-cent debit. That's a 670% gain on Amazon. Not too shabby. So that's just because it hit the pin price and it was out of the money in the first place. That's a good trade. Apple, I don't think Apple's in a good spot right now because it's right in between, but Amazon is pretty perfect. Okay, let's go. Let's keep going top down. Qs. Added in some credit spreads on the Qs yesterday. We're still not at the all-time highs. If we get a late year rally, that typical November, December seasonality, which tends to be bullish, the stretch from November to December to January is usually the most bullish window in the market. So if that happens to be 2024 and we get another bullish run, I do wonder if the Qs can get back to all-time highs and hit 503, 504. Okay. So I did put some credit spreads in there. NASDAQ futures, same thing. We had a 2-day sell-off, came down to that 50-period moving average. There's still a lot of dynamic support in here. Is this the support? Is this the bottom? I don't think so. I think we have a bunch of noise. Look at this. Look at this top. Look at this bottom. I could see price staying inside of here until we have some more clarity on the election. And the election is just going to be, the market just needs to get out of the way. I don't think the market really cares who is president. I don't think that the market really cares about anything other than hopefully justifying going higher if these earnings or consensus are positive, or going higher just because typical seasonality and traders are extremely bullish. But nobody knows, right? But I would say that if we have a high to low and we trade inside that range for the next week, it wouldn't surprise me. And we just go high, low, and then where do we finish for the week? So this is the last 2 days of trading with a big high, low move. If we finish right in the middle, and then next week we open up and everything is very indecisive. Okay. In fact, Monday is going to be an interesting day because Tuesday is election night. So for anybody that's in my daily profit play, Monday could be a really good day because if it's really choppy and really quiet, Monday could be like a perfect day. And then Tuesday to Friday, who knows? We're going to have more earnings next week. There's over 1,000 companies reported earnings. We got front and center election on Tuesday. You have the Fed on Thursday. So it's a pretty jam-packed week with data, not to mention a new month. Okay, so we'll see what happens. The Dow, I wish I would have put in a little credit spread on the DIA. This one's down about 3%, pulled back to the 50 period. I didn't get in the trade. I'm trying to get in lower if possible. I'll buy this thing lower, add in some credit spreads, but no exposure on that one for right now. Russell, kind of the same situation. We've got a high and a low. We're doing a lot of chopping here, indecisive. One nice winner on the small caps would be if we see small caps that can rally to all-time highs. Okay, all-time highs. That would give the Russell the opportunity to outperform the S&P and the Nasdaq if the recent highs are broken and all-time highs are achieved. Now, I don't know if that's at the end of the year. I don't know if this is going to be a disappointment because rates will be coming down, but bigger financing terms that we're seeing out there, like mortgages and corporate debt and restructuring, all these things are coming to a head in the next 1 or 2 years. So there's going to be a lot of corporate debt that needs to be refinanced in 2025 and 2026. And again, that could be kicked down the road, and that's not a reality right now. But that is something that's going to matter in the next probably 1 to 2 years. The VIX is down slightly. It's down 8%. That's a big difference from yesterday when it was up. This was the heat map from yesterday, so blood in the water. And it was led by large cap tech, which obviously is why we had a big sell-off day yesterday. But VIX is down today, which means prices have gone higher, which they did. They gapped up, and they've been pushing higher all morning. Dollar index. Okay, this is why I haven't called a direction on the dollar yet. I think the dollar index is at a point that we're going to have to make a decision. I saw Nick posted something about this earlier today that the dollar is going to be decisive. Well, it should be, but it might be after the election and the Fed next week. I don't know if the dollar has another launch higher into these previous resistance levels, and all this is a pause or hesitation, or if this is the swing lower, this is now the topping point, and then the dollar is going to return back to these lows. I still think correlation-wise, if we're going to see higher highs in the markets this year, the dollar probably has to go lower. Okay. But if the dollar doesn't go lower, then perhaps that means struggle bus for equities and dollar continues to go higher and it becomes more of a, risk. I don't know if it's risk off necessarily, just more of a safe haven. Not sure. So I'd be watching this level on the dollar. It's starting to get a little bit more decision-like. I just want to see what the decision is, which I think is going to be after election, after Fed. Look, I'm okay waiting. If the dollar is clearly going up here, I can grab some of that without having to guess where we're going right now. And if it's going down here, I can grab plenty of that and I don't have to guess where it's going. So I'm going to wait for the dollar to give me some more clarity. Okay. All right. Oil. Oil, nice little push off the lows here. We had 66.90. We had 2 days of kind of, I guess, a squeeze. This was definitely more of the squeeze that we saw with Middle East tensions and everything going on with Israel, Hezbollah, and everything in the Middle East that just continues to escalate. We are making lower highs. I still think this floor is in jeopardy. If it stabilizes and then still has a squeeze up here, that's okay. But I don't know. Just keep an eye on oil. I mean, I'm not doing anything on oil. I don't have any exposure on it. My CL trades are all closed up. But one thing that's going to help this inflation story is lower oil and lower pay at the pump prices for us in the U.S. That's one thing that consumers always pay attention to is what's the price of gas. So if our gas prices are going lower because oil prices are low enough or going lower, then that kind of tames the inflation story. Now I'd say just fix the freaking housing interest rates. It's a joke how much they've gone up. Okay, let's talk gold. So somebody's asking about US 30. I did the Dow. Yeah, I think support is fine. I'm still going to wait for a little bit deeper pullback though. Going into next week, all I see this Dow candle is today is filling the gap from yesterday. So we had a gap. We closed lower. We're pulling back to find that gap. I could see that level getting faded again. I would love to see this. There's my 100. If I can get 100, I'll probably put in a trade there. And anything lower, probably trade 1. And then in here, between the 144 and the 200, that'd be a trade 2. And those will be set out probably 3 to 6 months. And if those go up, then that's easy profit. Okay, so I'm not saying that this is the bottom. If it is, fine, but that's a shallow 3% pullback. So I'll wait. Okay, let's talk gold and silver. Gold had a decent pullback day yesterday. I'm still waiting. You can see all my moving averages, 2150. Still waiting. I want to see if gold can pull back before I start adding more exposure. Same thing on gold futures. Same thing on GLD. I want to see a pullback. Silver, we are pulling back. Same thing. Here's the 21 getting hit. I've got dynamic support at the 50, the 100, and I like the backside of this trend line. So if silver heads down a little bit lower, I'll probably add in some SLV and some GLD, or I'm sorry, SLV and SI for either some debit spreads, credit spreads, and or owning shares of SLV. My profit target up here at 35.88. Okay. Bitcoin, well, doesn't look terrible. Bitcoin nearly hit all-time highs. Today's candle looks a little bit more encouraging, up about 1.76%. I have to wonder couple things. So the day after the election, so that'd be Wednesday, the day after the election, pay attention to the S&P's candle, right? There's an interesting phenomenon. I talked about this yesterday in my YouTube session. I had a guest on with me, and he showed me a couple of charts going back to 1996, the day after the election with the S&P. Look at the daily candle. If it's red, that tends to be about a 2-week trend of red. If it's green, that tends to be a 2-week trend of green. So as far as looking out, past election, Tuesday night to Wednesday, look at the candle on Wednesday. So we have election night Tuesday. Look at the candle on Wednesday. If it's red, we probably have a couple weeks of downside. If it's green, we probably have a couple weeks of upside. That's a pretty good probability going back almost 30 years. And of course, if we have green, then there's your potential late year melt up in November, December. All the option flows, all the Vanna charms, all these great things that happen where November, December, January are historically the most bullish windows in the year. So I'd look for that Wednesday candle. So we can talk more about that next week. Okay. Russ, good question. Russ asking for yen plays on 2025. Russ, I'd say come join Nick and I on the 12th, November 12th. Sign up for that webinar and let's talk about it. So 70K Bitcoin futures. So what I was going to say on the Bitcoin side of things, I don't know if Trump is maybe the better president for Bitcoin as far as how Bitcoin reacts. I'm not saying Trump is a better president at all. I wish that guy would never be president. I mean, it is the closest thing to Idiocracy, the movie, that we have in real life. And it has made our whole political system an absolute joke. So I think it's bad on both sides. And it's even discouraging to think like we're just voting for two terrible candidates. Okay. Anyway, it doesn't matter. But what I'm saying is I know that Trump has been more vocal about Bitcoin and been more vocal about, bringing in miners and energy plays where, he's pandering to the Bitcoin crowd, which could be a big like fence voter, right? But if Bitcoin benefits from, Trump presidency more so than Harris, I don't know. But both have pandered. There's going to be additional. I mean, look, when you got BlackRock in the ring that's talking about crypto and they've securitized with ETFs, I mean, Bitcoin isn't the same But since it's been securitized and we now have ETFs, we've got major inflows in this stuff. It is helping. And if you throw on IBIT, you throw options approval, which they have it from the SEC. We're still waiting to see when and if it comes on OCC and CFTC. I would not be surprised if by the end of this year or going into the first part of 2025 that we have IBIT trading in options, which would be great. I mean, I have shares. I've been dollar cost averaging because that's all you can do. But the ability to trade options on this changes it a lot. You could be, I mean, there's tons of income opportunities here if you can trade options. And also with the cost of shares that I own, man, I can use options very creatively to lower my cost basis and increase my profit potential. So I'm hoping that by 2025 this is approved. So anyway, that's my exposure. Chart alarm set at 73,882 just to get above the highs. We'll see if we tackle that level. Yes, no, maybe. Otherwise we have some pretty good dynamic support. We got out of this chop for a while. This is a big accumulation period. We are making higher highs and higher lows. So I would say that this does look pretty encouraging to break all-time highs and still go higher. I have a symmetry move that's measured out towards 107, all the way up here, 107 to 108. So as I'm holding my Bitcoin positions now, and the maximalists out there would say, like, never sell your Bitcoin. But as a trader and the exposure that I do have, I would be looking to take some profit and then reallocate, because that would be probably a 7 or 8% gain in my portfolio from that 3% exposure that I have. And I'll reset it back to 3 to 5%, and I'll keep it pretty consistent. But that's my measured move. If we get up to 106, 107, then I'm going to start looking to see, is it diversion? Is price and momentum still in agreement or disagreement before I start looking to take some profit? Okay. All right. MicroStrategy had earnings and they missed on top and bottom estimates. That was earlier this week, right? Yeah, that was the 30th. But MicroStrategy has pretty much become this stock proxy for Bitcoin as well, and it's actually been leading the way, which has been interesting. MicroStrategy has had this run that's outperformed Bitcoin, but it's also just as vulnerable. If Bitcoin is down, MicroStrategy drops pretty hard. We've got the stock market turning a little bit lower. Let me show you something here. So I'm watching something on the day. We came right back up to this gap level from yesterday. I would love to see price. I mean, wishful thinking, but today, if price comes back down to the lows, I would love to see this trade get hit around 5,700. I've got potentially a 40 to 1 trade on the SPX that I took this morning. It's a low probability trade, like extremely low probability. But if somehow price gets back to this low and this close from yesterday, there's a monster profit potential right there, which could be fun. So something else to look forward to today. What else do we have? Ethereum, still choppy and sideways. Copper, still waiting. I think China has to get involved for copper. This is actually a pretty good looking setup, though. I wouldn't be surprised on copper if we have the following. Big run up. Okay, we had our ABC correction. This looks like a potential bullish pattern in the making that's just accumulating. So left shoulder, head to neckline. Okay, and if it accumulates over here, if there's a nice confirmation, stop loss below, take it back up towards these highs. I mean, does copper get to all-time highs? We'd have to have a good looking global economy for copper to get back to the highs. So I'm not calling the bottom here yet, but I'm watching this area pretty carefully to see how price consolidates. And then if we start going higher, then there's some opportunity to get long copper. Until then, I'll wait. And this China stuff is still, maybe after the election, China speaks up again and tries to lift animal spirits and China stocks rip and copper gets better. But anyway, that's that. Nikkei is still down. Japanese yen stuff. Yeah, I mean, I've got some ideas for the Japanese yen, but something tells me that the Nikkei and the Japanese yen are going to be stuck between these July highs and this August low. And traders are going to be in here just getting the snot beat out of them with all this chopping and decision, where this is the level that I'd be interested in selling and watching for structure to see if we in fact go down to retest these lows. But I do not want to live and breathe in that environment. Now, that being said, let me look at the Japanese yen futures here, because you notice how the Nikkei is choppy. Japanese yen futures is a little bit more decisive. Okay. So I would consider trading Japanese yen futures if we come back down to these lows where we had some intervention, we saw the Japanese yen starting to, or the Bank of Japan starting to cut rates, or raise rates rather, that maybe I could get long there and see if that pops back up. We just have a big range to look at. This would be support. This would be resistance, you know? So there's a couple of ideas to have. I just want to see where these levels actually line up. Okay, that's Japanese yen, that's Japanese yen, that's Japanese yen. The DAX found some nice support out the 50-period moving average. Again, could this high be in place? Maybe. So high, low, lower high, lower low. I still like this. It's been very well supported, right? Pretty well supported, pretty well supported. I would still look at the same thing. Are we supporting this? Well, do we get to all-time highs? Maybe. And then the FTSE broke lower. That's UK. So we broke lower, but this was a pretty attractive spot. If you're looking at this from a longer term investment or just getting an opportunity to buy, it's like we've had this 200 moving average holding really nicely. So as a low risk trade, if you're buying the FTSE, stop loss below, does it come back into all this indecision? Does it get back up towards these highs at all? If so, there's a decent reward to risk right there. But it just came back down to test that 200 moving average. Okay, Henseng still sideways. That's Brazil. I got some shares in EWZ. This thing as an emerging market is performing like garbage. Mag 7, 221. Okay, it's fading back down on Apple. Let me see what this one's trading for this morning. So I'm out of the trade on Apple. Let's see here. AAPL. So let me see on my put side what this one's trading for. It's break even. Break even. Huh. Actually, wait. Oh, I'm sorry. This is trading for 75 cents. So Apple, I put on I did two flies. I did a put fly, I did a call fly, and right now the put fly is trading for 75 cents. And I closed out earlier for 55 cents to take some profit. If I was still in the trade managing it, there is a 43 cent of total debit that right now is offering 75 cents of credit. So you can turn one trade into a winner that covers the cost of both trades and walks away with an extra 30 to 40 cents. If this price, by the way, I'm going to monitor this one. If Apple is sitting around 220 by the end of the day, this 75 cents could be trading upwards of like $2. So if you want to hang on and kind of manage that butterfly to, kind of peak profit, then you're doing that later in the day. All right, what else? That's Apple. I still have some shares of Apple covered at $200. This thing, when it ripped way up here, I certainly wish I would have bought some more at that test. That was a wild. Apple's been on a wild ride, by the way. This year's been crazy, right? Apple was down, 18%, and then has one of the biggest rips with all this fake AI. It's like, oh, yeah, Apple's an AI too, and it goes up 44%, becomes number one in the world again. But man, that's a very volatile stock, considering Apple was usually trading right alongside the S&P. So we've had a lot more drama on Apple than before. So I would say this though, if Apple pulls back into this area, let's say we get 200 again, I'll probably look at some ratio spreads. I'll probably look at something on Apple. Okay, Amazon trading right around that $200 strike. I'm covered up to like 210 on that one, but my puts are going to expire worthless for protection. I didn't need them this week. Google was a bull call spread for profit. Meta still waiting for deeper pullbacks. Microsoft. Let me take a look at Microsoft today. I might put a trade on here. I was talking about this one late yesterday during my final hour session. Let me have a look-see here on Microsoft. I see the euro dollar. Yep, I'll take a look at that for you. So table on Microsoft. Let's say we go out to January of next year. I wouldn't mind owning some shares at 340. I think I'm just going to do a ratio spread. So 340. What do I have running on Microsoft? I think I just have a credit spread or ratio spread already. Let me find out. So I have a bull call spread and a bull put spread. Okay, so this would be a ratio spread. Let me see what that looks like again. That's just a credit spread. So if I did like the 345, if I, let's say I buy the 325 and I sell the 320, 78 cents. Do I love that? Not really. So let me bump these up. Let me go a little bit higher. If I go to a 350, so I buy the 350, sell the 345, that's a little bit better. So that's an income play. Do I like Microsoft enough to own it around 340? Well, the break even on this trade, I would own the shares for the following level. I would have 350. So I'd have 345 as my assignment price minus $1.58. Oops. Minus $1.58. I'd own it at 343 plus I'd have the $5 from the long put. So I'd own it at 338.42. If I own shares at 338.42, current price dropping all the way to 338 would be another 17.8% to the downside. That would be Microsoft pulling back around 27.5% off the all-time highs. It's an income play. I like that spot. I guess it gets a little, I mean, if that spot doesn't work, let me see what the premiums are. They've got to be decent. What is a 30-day covered call going for at the money? Okay, so I mean, I could aggressively lower the cost basis. That wouldn't be a problem. Allocation-wise, if I own 100 shares, that'd be 30,000 cash, 15 margin, plenty of buying power on most of these accounts. So I think I'm going to take the trade. I'd like a little bit more for that ratio spread, but that's not too bad. Okay, here's the trade. I am willing to own the shares of Microsoft. I'm going to put on a ratio spread. Ideally, I don't get assigned at all. This is out to January. If I go January 17th, the probability of assignment is around maybe 10%. Maybe. Okay. So I'm going to see if I can get at least $1.55. I'll try to get $1.60 for this. $1.60. Let's see what this looks like. $1.60 not filling. Let me finesse this a little bit lower. 59, 58. Minimum is going to be $1.55. All right, filled at $1.57. Okay. So $1.57 filled. $1.56 filled. Come on. Like I said, minimum's $1.55, which will probably get filled here. Okay, I'm gonna let that sit. And then one more account. 9151. Okay, those are pending at $1.55. That should fill. I'm going to add that in. So that's going to be an added trade in here to my stock options. This will be Microsoft. That's a 117 expiration. Buy one 350 put. Sell two. I'll go buy one put at 350. How about that? I'll make this a little bit easier to read. Buy two puts at 345. $1.55 credit. Willing to own shares, but only about a 10% chance of assignment. $1.55 income on the credit spread or the ratio spread. If shares are assigned, break-even price is it'd be $5, it'd be $6.55 minus the assignment price. So 6.55 minus 345, 338.45. 338.45. All right, I'm just typing this in my Pulver Alert section for stocks and options. So there we go. Okay. So Microsoft. Let's see, did that trade already. Zoom in here, add in the ratio spread. So a 117 expiration, 350 buy put, and a 345 sell put, $1.55 credit. So down here, take a screenshot, get this posted. Here we go. And I still didn't get filled at $1.55. What the heck? I'll let that just sit. I'll let that sit. That's good till canceled. So if I go replace, it's already good till canceled. I'm going to let that hang out. Yep. All right. So $1.55 is my minimum. And that's Microsoft. Anything else that I like for today? Netflix. I have some income trades here. I'm not calling the top on Netflix. Nvidia. There's probably some interested parties of buying dips on Nvidia. I'd like to see a deeper pullback, to be honest. Semiconductors got hit pretty hard yesterday. Here's a 50. Here's a 100. I'd like to see if Nvidia can just stall, maybe come back into the backside of this trend line. So I think anything under 130, I'd probably put in some activity on Nvidia. Otherwise, I've got a lot of credit spreads, naked puts, ratio spreads all the way down here, sub 100, that I'll just take the income on. Let me see where I'm sitting on Nvidia. I know I've had some profit on it without having to own any shares. I'm up about $4,700 without owning anything, which is okay. But I'd like to have a little bit more activity there. Tesla, interested in owning some shares. We took profit on this one with the Pulver Alerts. It was a 225 by 220. Took the profit on that with the earnings play. And then I got right back in near the top at 270 by 265. I'm willing to own shares. This is out to January, so there's no rush on this trade. If we go down to fill this gap, I would probably take the long put off, own the shares, and then start looking at repairing and trying to make. I'm going to try to go after $5 or $10 a share net profit. So I'll turn that into a little bit of an ownership play. All right. Euro dollar I saw. Let's go euro dollar. Saw that request. Look, I come back to the same situation on the dollar. There's nothing to do right now if the dollar index isn't giving you clear direction. I think the dollar index is going to be something we've got to wait for the election next week and the Fed, and then this dollar tells us where it's going by the end of the year. So rather than being a hero trying to get everything perfectly timed, we don't have the timing. I'd rather get in late with the confirmation and probability we're going up, or I'd rather get in late with the probability and confirmation we're going lower. I don't want to call the dollar. So the same thing is true on the dollar, the euro dollar, the Aussie dollar, New Zealand dollar. Look, I like the Aussie dollar and New Zealand dollar a lot. But what do I like about them? I'm hopefully liking some type of support level. So not right now. I'm not buying this thing now. But if we come down to these lows here, like this is a great spot to be long the Aussie dollar. Okay, the New Zealand dollar, same thing. I mean, if it comes into a level that is appealing, I like the spot. So if we get down to 58.60, I'm probably going to take a stab at this and go down 58, 57, and 56. Build small positions. Take some tests, and then if I get proven right, then we can add to it and trade this back up into some bigger range. If we go from support to resistance, well, that's a good trade. So I'm looking to see if we are getting the price levels that we want to see. So I'm hoping that we can start buying some New Zealand dollar down there. The other one that I'm interested in the dollar CAD. We're trading at 39.15. I have stacked orders above 4,000. 40.25, 75, 41.50, 4200. They're all just stacked orders. So if they get activated, I think this is a breakout trade that I measured for the last couple of years of range. If we break out, then I'm looking at like 44.50 to 44.90 for profit. And I just want to stack those orders up. So the dollar stuff, I don't have a clear direction on the dollar. I'm willing to wait until after the election next week, after the Fed, see if the dollar gives us any clarity. I still think that in order for the markets to go higher, like these stock market prices, equities have to go higher. If they go higher, dollar should get weaker and equities can go higher. If dollar gets weaker, I would expect gold to still perform well. I'd expect Bitcoin to still perform well. I'd expect, silver to hang in there and perform like gold. For equities to go up, I think the dollar has to go lower. So for today's example of, what's happening with the dollar, it's noise. It's doing this because there's no decision right now. We've had some indecision after this big breakout in that bear trap, and it's just going to make us wait. I think the dollar is unclear. So give it literally like wait a week and see what happens. I think that's better. That's better, but I'm not trading this noise. Okay. It could be. It'll be interesting. That's a good question. Lee says, would a Trump victory be bad for Aussie because the tariffs he put on Chinese? Maybe. But are we going to do it? And is it going to be to that extreme? Are we going to put like just an insanely penal tariff on China? And if we do, look, what do tariffs do? Inflation. Like, come on, dude. I mean, if we put tariffs on, it's inflation. We already have inflation. It's getting worse. It's like second wave is starting to bubble up. We put tariffs on top of that, it's getting worse. Our cost of goods will go up so much. So, I mean, there are pros and cons, and I honestly think like the tariff situation is probably worse for the global economy. It will add so much additional friction. I think that'd be very inflationary. So, I mean, if Trump is making big claims to be like the greatest president ever, then how are we going to fix higher inflation, most unaffordable housing market we've ever seen, to a broken economy, to a K-shaped recovery, to the haves and the have-nots? Like, it's not great. I mean, we've been getting by on what data point shows like, oh, everything's fine. It's like, it's not fine. Things have been a mess since 2020. But there's good trading opportunities. That's one way to look at it. But for just like the average economy, it's not great. I feel like we are fudging these numbers like crazy. Euro dollar, I just talked about it. Dollar index, I don't have any good trade on dollar index. Euro dollar, I would love to see the euro dollar back down here towards like 106. I'm not interested in trading the middle. I think this is a choppy zone. If we come back down to these lows, I'd love to buy some euro dollar down in here, get some major support, and see if this comes back up into the halfway point or back up to the range highs. The only issue I see on the euro dollar fundamentally is that the ECB is cutting rates and the Fed is slowly getting there, but the ECB has been more aggressive. And that, euro economy versus, US economy might be different. So I like the support. If we get support, I wouldn't mind buying euro dollar, but I also wouldn't want to be sitting here holding the darn thing, because if I'm going to buy this thing low, it's going to be at like 96 again, So there's two ways to look at this. Either this euro dollar pulls back for a lower high and then we have a run down to these support levels, or this thing is going to go lower, find support, and then come back up and find some efficiencies. Euro dollar is still one of the most liquid currency pairs in the world, so it's usually pretty efficient. So I don't typically see a lot of big crazy trends without it doing something like finding some pockets and pullbacks and pivots. Okay. All right. Okay. Any other questions for me today for this morning? I've got some 0DT stuff to watch and monitor. P&L's up on the day. Let's go into DTE. So I did get rid of a lot of my 0DTs. I'm going to have some trades that are closing. There it is. So KO, I'm going to add a couple credit spreads. SPY, I've got a 585 that's going to be worthless by today. That's a loser. Apple, closed out the butterflies already. That's fine. Ford, I had a put on. That's going to be worthless. It didn't really help. I only paid like 10 cents for it. SoFi, same thing. I didn't cover anything. I was tempted to cover some shares on SoFi, but I didn't. SPX, I've got that little butterfly today that pays 40 to 1 if I'm spot on with a 5,700 close, which is unlikely. JD, I rolled. Pfizer, I'm trying to get someone called away next week at 29. Pfizer is up 19 grand. Like, come on, man. I did get another like 25 to 30 cents out of that. OXY, same thing, like just trying to repair some of these trades, grab a few bucks out of it. Pfizer is going to be a nice one. I'll make like $2,000 or $3,000 per account. OXY is going to be like $500 to $600 per account. And then I'm just going to wait on China. Maybe the post-election, we get some animal spirits discussion. We get another like vocal stimulus trade from China. We just revisit those highs we saw back in August, or actually, what was the rip we saw back in China here? So where was it? That move in October. So I was going to say it was September, but it was mostly ripping in September, and September to October, like just crazy fast. But here we are, just like up, down. Do we pause and then have another push to the highs? Hopefully that's the case. Okay, pound dollar. I did take a trade on pound dollar. I'm up around 30 pips right now. So I talked about this earlier in the week. I added into my Forex section of pulver alerts. Basically, I'm just using the 200 moving average on the daily time frame. I'm scaling in there, and I'm scaling in here with a stop loss below. So if this pushes higher with a weaker dollar in any capacity, well, that trade I'm going after some pocket profit and then the highs to see if those get retested. So if I'm in at 29 and I get out at 31 or 32, I might at least move stop losses or take partial profit. If I get trade 1, trade 2, and it bounces off this trend line, then I'm going after a few hundred pips net on both trades. Okay, Aussie New Zealand pairs, Euro New Zealand. I mean, there's I don't know, nothing. I don't see anything. I like resistance, and that's it. So if I hit resistance, then look for that trade. Right now, it's in the middle. It's, if you want to buy dips, then I suppose this is started at support. So if there's another dip to be had, and then you can buy that dip, that's fine if you're following shorter time frames. Otherwise, it's just resistance up here, support down here. So sell high, buy low. Okay. All right. I will leave it at that for now. Daily profit play. It's like, I want to put on a trade right now for SPX. Let me see what this is trading for really quickly. I may or may not take this trade. SPX trade here. So currently, got to flip this on the call side. Possibly get this one. That's a 9 delta, 8 delta, 55 cents. Let it go all day. That's probably not what I want to do. 10 wide. What? That's going to be a conflict. All right. Well, I get $1 credit there. 85 cents there. 70 cents there. 58. What would that be on SPX? So 58.05. Ooh, that is potentially, that's the gap fill from yesterday. I don't know. I'm 7 for 7 on this trade this week. I don't really want to force a trade, but I'll probably just wait a little bit longer. All right, never mind. All right, I think I'm going to let you go. Have a great Friday. Have a great weekend. Couple things. Look, A1 Trading, biggest discounts of the year, started today. I'm happy to be a part of the bundle. So if you click on the link, the best thing would be to talk to a team member and just have them walk you through it. There's a lot of different product offers. You've got the A1 EdgeFinder Pro, you got the stock box, you got the pulver alerts, you got trades from Nick and Frank, you got the whole VIP bundle. So if you talk to a team member, have them walk you through it just to give you the breakdown. I do have something to add to it. If you are getting the one-time purchase of like the full pay, so you're doing like the gold VIP bundle that includes my pulver alert service, I do have a full options course to give you. It is 13 strategies, 11 videos, a full strategy guide PDF. And so if you are purchasing the full-on bundle that includes my pulver alerts, then I will throw that in there for you. So I'll make sure you get access to that. Okay. What does the gold chart look like over the past 10 years of election times? I don't know. I don't think I can do that in 30 seconds. I mean, if you want to go back to 2020, 2016, 2012, 2008, what's gold done? I don't think gold's going to care other than trying to go higher. I mean, if you ask me, like, gold has been one of the easiest trades all year, and I don't think gold is all of a sudden going to stop. So I'd like a pullback in gold. I think there's some volatility potential next week, but I think gold is probably one of the better assets to be buying dips on. I mean, I think the reality is this investors are looking at this as this is real. Like the dollar's getting debased, the global money supply keeps getting added to, purchasing power keeps going down, inflation is a thing. So gold has been an inflation hedge. Gold has been an a store of value. And you have, it's interesting, you have like gold and silver and Bitcoin all performing very well this year, actually outperforming the indexes. They're also maintaining major bids by central banks. So even go back 30, 40, 50 years, this is a different environment. We haven't had the type of interest with central banks adding gold to their balance sheets like we have had over the last couple of years. China being one of them, So I just think gold looks good to buy dips. I'm just waiting for dips. Okay, dollar yen. I got nothing on dollar yen. Watch the high from July, watch the low from August. I don't care about it in between. We'll talk about that more. I've got some bigger plans on the Japanese yen and in the futures market come November 12th. If you sign up for that webinar with Nick and I. Okay. All right, cool. Have a great Friday. And have a great weekend. We'll see you soon. Thanks. Bye.
Attention. The Black Friday sale is happening now. You can get 40% off everything on a1trading.com, including the brand new stock box, pulver alerts, the EdgeFinder, and more. Thanks for watching today's A1 Trading Show. Make sure to subscribe and to leave a like down below if you enjoyed. If you'd like to join the show, you can become a guest with the link in the description below. That's all for today, traders. We're heading for the moon.